morning, traders. What is going on? And happy Money Monday. Woo! Everybody upstairs hates me. Everybody downstairs hates me. But guess what? I hear those footsteps at 6 a.m. Oh, I'm going to yell. I'm going to scream. I'm going to get fired up because you know what? That's all that matters. That you guys are pumped up, that you guys are fired up and motivated and ready to go and ready to attack this day on this beautiful Money Monday, ladies and gentlemen. So once again, what's up? What's going on? And good morning, team. And good morning, traders over on YouTube. Everybody inside the chat, hit me with a good morning. Everybody on YouTube, hit me with a good morning. TikTokers as well, hit me with a good morning. Even though I'm focused on chat, I'm focused on YouTube. So guys, I'm not going to forget about you. But again, I can only look at two chats at the same time. So come on over from TikTok over to YouTube. Alpha Day Trading. We're getting ready to have some fun. Getting ready to get our day going. All right, get you guys prepared. Angel, what's going on? Casey, woo! TikTok mom, good morning. What's up, YouTubers? We got Mike B, WA, Mark Anthony, what's good? Nick, Denise, and Frank. Ed's over on YouTube as well, supporting that YouTube stream. Guys, go ahead and smash that like button, hit that little notification bell, subscribe to the channel, show us some love, and support the stream, guys. I appreciate you. JR Shots, what's up? Traded Girl, Beth, Corey, Casey, Angel, ow! What's up? And happy Money Monday once again. It is 8:56. It is October 11th, and today, team, we're going to have an awesome day. We're going to have a fun day, and we are going to have a profitable day. Sound good? Who likes it? Who likes it? What? Casey, Mark Anthony. What? What you talking about, Casey? Where? When? Who? Why? I'm confused. The singer on where? TikTok? No, really? That's pretty sick. That's pretty cool, huh? Huh? Maybe it's a different, I don't know. We'll go find out. That's pretty cool, though. So, all right, team, let's go ahead and dive into it. There's quite a few things to talk about, right? We're going to go through those up-gappers, talk about my options watch list, look at the SPY, kind of give you an idea of where I think the SPY could be going to next, and then try and leave some time for a little bit of a Q&A and to review your guys' stocks and tickers as well, okay? So, let's go ahead and dive into it, guys. Number one on the leaderboard this morning on this beautiful Money Monday is PTG to the X. PTGX currently up 90%. That's what I'm talking about, baby. We actually have stocks up more than 30%, right? FLXM, ADMS, and PTGX all up over 50%. I smell opportunity in the market today. I smell profits. I love it when stocks are gapping up more than 20, 30%. Should be a good day, should be a hot day, should be a profitable day. So PTGX, why is this stock even gapping up this morning? All right, why is it gapping up? Why is it gapping up? Well, this morning on PTGX, if I can find the press release here, where's it at? There it is, 5 minutes later. PTGX announces removal of FDA clinical hold on the resurfatide clinical development program. So again, they announced the removal of the FDA clinical hold on its experimental cancer drugs. So that's some pretty good news, and that's exactly why PTGX is gapping up 90%. PTGX is trading pretty good volume as well. 3.1 million shares on average. It trades one, and it's a medium float stock as well with a huge gap to fill. Huge gap to fill, right? From a $44 area gapping down to 20 bucks. That's a $24 gap that could easily be filled. And we are seeing PTGX look really, really nice here in pre-market. So a couple levels we need to be concerned about before we possibly see that $44 to $45 gap fill. We have those pre-market highs of $37.23. That's resistance. We also have that 50 SMA at 38.21 that we need to be mindful of as well. That can hold this stock down as resistance. But over those two key levels, we have a lot of room to start filling that gap here on the daily chart. And I'm actually marking up this lower shadow. Yes, it could come all the way up to 46. We could see 45, but I'm actually looking at that extreme point, right? The low point right there around 43.80. That would be my target. Not to be greedy to get 20 cents for 44 or $1.20 up to 45. Listen, 43.80 would be a level that I take profit. And again, maybe start getting involved in this over 37 and 38. There's still a lot of opportunity to the upside here on PTGX. Again, we do have some room up to that 43.80. We do have resistance at the high a day of 37.23. We may see some resistance at the 50 SMA at 38.21. We need to clear those levels, and then we could definitely see that 43.80, maybe even 45. And who knows, if this stock is strong enough, we could potentially see 50 bucks here on PTGX. Right now, support is at $33. What's at $33? Well, not only was it some daily support, right? It's also that 200 SMA. So the 200 SMA with some daily support right around 33, we actually came down and bounced here in pre-market. Now, if we start dropping below that 33 level, we could definitely see this down towards around 31.75 would be the next best level of support. But right now, nice bounce off the 200 SMA. Nice pullback into the 90 MA and the VWAP. Looking like we could see the next leg up momentarily on PTGX to push this up towards around 37. So again, PTGX, we have good news, good volume, medium float stock, nice gap up, good looking technicals, definitely a lot of opportunity today on PTGX. Number one stock that we should be watching right out of the gate. Number two on the leaderboard is ADMS. Why is this not worth your time? Someone tell me. Why is ADMS not worth your time today? Can someone please tell me why it's not worth your time? Casey said that's Josh's job. It's my job to challenge you guys. Not enough volume? No, not the volume. Look at the press release, right? Look at that press release. It's an acquisition. It's a purchase, right? So ADMS, right, is Supernus Pharmaceuticals is buying ADMS, right, for $9.10 per share. $9.10 a share. What is the company worth? It's worth $9.10 a share, right, or $450 million. So why is this stock really probably not going to do too much? When we see acquisition news, you typically see a quick spike and then it levels, right? Now, again, technically, it's worth $9.10 a share. And here's the thing, for up to, it's not saying it is, right? It is $9.10 a share in cash, up to $9.10 per share in cash, or about $400 million. So it says Supernus said it will pay $8.10 a share, or about $400 million in cash, and 2.50 per share contingent values based on the net sales. So again, the headline is for up to $9.10 per share in cash. But then when you actually read the article, right, it says that they're going to pay $8.10 or about $400 million, not $9.10 and $450, right? So again, sometimes you can't just take the headline. You got to dive into that article and that press release just a little bit. So again, $8.10. Why do we see a spike up to 8 and then a level? Because that's technically what the company's worth. ADMS, not worth your time, guys. It's going to sit sideways. It may move 10, 20 cents. Not worth your time. This is not where the focus is going to be. So moving on, FLXN. All right, FLXN number 3 on the leaderboard. Currently gapping up 70%. 3.9 million shares traded against its 1 million on average. Another, isn't that kind of crazy? Look at PTGX, right? The volume traded, the average volume, the flow is identical. It threw me off for a second. It threw me off. I was like, am I looking at the same one? No. FLXN has an identical flow to PTGX, and it's trading very similar volume. So again, FLXN is number 3. It's a medium float stock trading good volume up 70%. Why is FLXN up, right? So FLXN is going to acquire Flexion Therapeutics. Well, I'm sorry. Back it up. PARCI, Paracel Biosciences, is acquiring FLXN, right? They're acquiring FLXN. So it's more acquisition news, but I'm actually surprised that the stock is moving above the acquisition price. Again, 90% of the time, when you see acquisition news, pop and level. Again, it's 90% of the time, not 100% of the time. It's rare that you see acquisition news and that stock continues to rip and run higher than the acquisition price, right? It's rare, but there is that slight chance. So here we go. FLXN, right? Shares of FLXN climbed more than 70% in pre-market trading after the biopharmaceutical company agreed to be acquired by PCRX for $8.50 a share in cash plus a non-tradable contingent value rights worth up to $8 a share. Flexion shares jumped to 10.10 during pre-market after close at 578. So again, it's just not 100% of the time. Every now and then you will see acquisition news get some hype, and it will be a stock that is traded for that day. But again, 90 to 95% of the time, you're going to see an ADMS, right? You'll see ADMS pop and level, right? Every now and then, it's rare, but every now and then you will see a stock with acquisition news get some hype. And I'm actually surprised that this stock is trading about $1.50 more than what that acquisition is going to take place at. So the fact that we are trading above, we see some volume, there is some movement, we are going to be keeping FLXN on watch, okay? So where could we see this stock go? Well, right off the bat, we have a lot of resistance right there at 975, but we're actually above that 975. So now that's going to be a level of support. I'm actually going to bring you down to around 968 supports here on FLXN. Now, if we start cracking below that level, we could see this drop all the way down to the 200 SMA, which is at $8.71. All right. Now, if FLXN holds this level up at 968, we can break over those pre-market highs of 1035. We could easily see it up towards around 1085 and then possibly up towards around $12 here on FLXN. However, if we crack below this light level of support right around 968, we will most likely see this pull back all the way first into the 200 SMA, and then we'll probably see it come down and level somewhere around that 850 level, that 850 price, right? What it's worth from an acquisition standpoint. So for now, FLXN is on watch. We have volume. It's a medium float stock, right? Not a low float, it's a medium float stock. But it is trading good volume. It's actually up about $1.50 from that per share cost from their acquisition news. And again, if it holds on up and the technicals are here and there's volume, there's definitely opportunity. But if it cracks below that 968, I would think it would fall down towards around 870, that 200 SMA, and probably just level the rest of the day because the acquisition price was right around $8.50. So we are going to be watching FLXN. Number 4 on the leaderboard is TRVI. What's up this morning with TRVI? Well, I actually had some news there on Friday. So Friday, where is that news? So the shares rose this morning 34% in pre-market after the company filed on Friday that it was going to withdraw its offering of shares. So they're no longer going to be issuing an offering. So that is positive. Now you see traders moving in to TRVI. TRVI is a 7 million in float stock. It is trading 2 million shares. On average, it trades 80,000. So we have good volume. We have a low float stock. We have good news, and it's gapping up 31%. And right now here in pre-market, it's actually breaking its downtrend, trying to get back above that VWAP. So again, TRVI has, again, that good news, the volume, low float, and it's gapping up 30%. We could definitely see TRVI back up towards around $2 today, right? Retesting Friday's post-market highs. Before that, we are going to have some resistance right around 175, and right now support is right around 146. Now, if TRVI ever breaks above that $2 level, you have room to 216, and then you have room to 228 to 229, which is the 200 SMA, and that's going to be one of your major targets there on TRVI. So again, right now, it's a game of patience. Sit back, waiting for a good opportunity. We know support's at 146. We know first level of resistance is at 174. Then it's 199, 216, and 228. Now we wait for a technical setup. Now we wait for something where we can apply our edge, right? Where we have higher probabilities of being right versus wrong, and we take advantage of the opportunity if an opportunity does present itself. So again, TRVI is another stock we will definitely be keeping on watch, guys. Moving on to EZFL. All right, so EZFL, where is that press release? It had to do with the fuel delivery. Yes, at 7:30. So they bought an additional 33 added fuel trucks to support Florida expansion. So again, they more than triple their size of their fuel delivery fleet and advances their expansion efforts. So good news there on EZFL, and this stock right now is currently gapping up 14.8%. Now again, that press release has been out for about 2 hours now, and within the last 2 hours, we've only traded 2.3 million shares, and on average, we trade 3.5. We're definitely going to surpass the average trading volume here on EZFL. But again, we don't have volume like we have volume on some of these other stocks, right? ADMS, I know it's the acquisition news, but it's trading 5.5 million shares. FLXN's trading 4 million shares. So again, we don't have the best of the best volume compared to other stocks, but we still do have high relative volume, or we will have high relative volume, I'm sorry, on EZFL. Sorry, I just got a little tongue twisted there and it threw me off big time. So again, we have good news there on EZFL. We don't have a float. It's a newer IPO stock. The stock IPO'd back in September, right around like $4.50. Within the second day, hits $5.49 and then fell all the way to $2.82. But again, they dropped a pretty decent press release. They more than tripled their fleet and they're expanding their area. So again, we do have some pretty decent news here on EZFL, and we could definitely start to see some more action move back in to EZFL. So right now we do have some light support on EZFL down towards around 394. Below 394, some light support down towards around 397. Now resistance right now is right around 409. We do have then resistance right around those highs at 436. Anything over the high of day, guys, right? So if this stock's strong, if this stock really starts moving on up over those highs of 440, we have room to 455, 480, and then 501. If this stock ever breaks over 501, you have 520 and possibly retesting those highs of 549. So again, nothing right now. It's not set up. There's no reason to get involved with EZFL. But if it does set up, we know our levels. We can get prepared and take advantage of a possible opportunity. But let's be honest, there's better opportunity in the market. I'm watching PTGX right out of the gate. Definitely watching PTGX. I'm going to be watching FLXN as well. I think FLXN actually has a little bit of potential today. So I do want to be watching that one as well. And I do want to be watching TRVI. So right now, EZFL is more of a back burner play that could get some hype, that could get some activity. And I do want to keep this one on watch, at least be prepared and do our due diligence, which we're doing right now. So if we do come across EZFL at say 10 o'clock and it's setting up, we don't have to go through and look at the chart, do the technicals. We don't have to do that. We're already prepared. So right now we just sit back, be patient, more of a back burner play here on EZFL just in case it gets any hype. But again, right out of the gate, guys, to start the day with small caps, right? TRVI, definitely something we should be watching right out of the gate. Definitely PTGX and definitely FLXN, right? Now, AEHR has been a momentum play for months now, especially last week. Every single day last week, green day, green day, green day, from around 12:22, nearly hitting $20 there on Friday. Again, this morning, we have another press release that they're receiving a $1.3 million order. So they're receiving a large sum of money, $1.3 million order. AEHR could definitely see some more hype because we do have a good, strong catalyst to back up this momentum move, to keep this stock moving to the upside. So again, AEHR, I'm looking for a break over 20, right? If this stock breaks and holds over 20, we have room to 21.48. Anything over 21.48, we have room to $25. Right now, support is back down towards around Monday's open at 17.55. And if we ever crack below that level, we have that slight gap that needs filled here on AEHR down to 16.74. Even if AEHR doesn't do anything today and it's pulling back, I'm definitely looking for the stock to pull back like it did here for the next leg up. Look at the big gap. Look at the pullback. Look at the massive bounce, right? Look at the gap. We could see a pullback into that gap fill level, and we could see a nice little bounce and see some momentum move back in to AEHR. So even if AEHR doesn't do anything today, right, I'm still going to be keeping this one on high watch for a possible upcoming swing trade, okay? So AEHR, not only for a day trade, but for a possible swing trade if we get that nice technical gap fill bounce and we see some momentum move in like we saw last week. DATS has been a mover since the IPO from 331 to 1850, pulling back very aggressively last week and then seeing a nice little bounce there on Friday. I want to keep this one on watch above 1088. Ideally, I want to see this above 1173. If we can trade above 1173 on DATS, we have room back to 13 bucks, right? Retesting those post-market highs of 12.95, right around 13 bucks. Anything over that level, it has a lot of room to 14.80 to $15 on DATS. And when DATS moves, we know it moves. So again, this stock above 1173, I think we have a lot of good potential to retest 12.95. Now, if we cannot get back above 1173 right now, we still do have room to fall down towards around 1088 next. There on DATS, another stock that I want to keep on watch. No fresh news, but the stock has been moving up nicely for the past couple of months, and we had a nice big day there on Friday, and we could definitely see some momentum and another day to the upside here on DATS. And then same thing with CCXI, a huge day there on Friday, right? It gapped up in the first place because we had news. It started selling off, fading, a lot of momentum to the downside, and then boom, midday, we have a price target being raised, article that was dropped at $102, $101, something like that. So again, we had a strong price target being raised from like $30 to $101. But here's the thing that we see this morning on CCXI, that they're raising price targets from 14 to 38 at JP Morgan, right? You have JP Morgan upgrading from 14 to 38. You don't have any aggressive price targets like we had on, it was Raymond James on Friday. Raymond James, 107 price target from Raymond James, right? 107, that's high. Then you have Chemocentrics at 64. And then you have JP Morgan at 38. So there's a pretty big window from a 38 price target with JP Morgan to $107 through Raymond James. And then right in the middle, you have Chemocentrics at 64. So again, there's a lot of, price targets out there, but not a lot of certainty because the prices are pretty far off. So that being said, there's definitely some anticipation with CCXI to a big target to the upside, right? But there's also some reality, right? There's some realistic price targets at 38, which we're sitting at right now. So we'll have to see what CCXI does, right? I'm looking at CCXI to break over those pre-market highs. If we break over those pre-market highs of 41.29, I'll take it long to 44. I like it up to 44, right underneath those daily lows. And then we could possibly see it up towards around $49 to $50 here on CCXI. Right now we have support at $37. Below $37, we have support at the 200 SMA, which is $33.79. So right now, I want to see a hold above 37. Ideally get a break over that 41.29 for a nice little move up to 44. And then we could potentially see it up towards around $49 to $50 there on CCXI. Okay, so again, let's go ahead and recap. Back burner plays, right? Back burner plays, but I still want to keep these on high watch. You got CCXI, we have DATS, and we have EZFL, and we have AEHR. Stocks that I'm watching right out of the gate: TRVI, PTGX, FLXN. Top stocks that I want to be watching right out of the gate, guys. All right, so I'm actually going to go ahead and rearrange my watch list real quick. And we are good. All right, now options, right? We got a little bit of time. Options. I'll make this quick. Netflix, daily reversal off 614. We see a nice pullback this week into the 614s, and we start to see that reversal form. I'm looking to take calls back up to possibly retest those highs in the 640s there on Netflix. SE, nice falling channel, and we just bounced last week off 309.87 support. If we can build some higher lows and hold that 50 SMA and break this downtrend right around 330, I'm looking to take this long into the 340s. ROKU, I'm still adding, right? ROKU, I'm still adding. We finally got a strong bounce. We got back above that 20 EMA. I do want to keep ROKU on watch. Are we going to crack below that 320 level and fade down a little bit more, maybe back down to 300 bucks? If so, I'm going to add some more. Are we strong enough to hold the 20 EMA and break over that 326, 327 level and continue higher, possibly into the 340s? I don't know. We got to wait to see what it does out of the gate. So again, breaking over 326, 327, I will take it for a short-term swing trade into the 340s. Cracking below that 320 level and fading and falling, I'm looking to add to my long-term investment on Roku down in the low 300s once again. But I do think Roku is primed. I do think Roku is good to go, and it looks great back up over $400 definitely by the end of the year. We're watching SOFI. SOFI this morning after Morgan Stanley initiated coverage on the stock with a $25 price rating. SOFI. Another thing about SOFI is a friend of mine actually has a friend that works for SoFi that's something. And an early investor, I don't know. But he was passing some information along to my friend, and he was telling me, hey, he's getting ready to load up on SOFI. There's big news coming. The stock's well worth over $100. Again, it's all speculation. I don't know if it's a rumor. I don't know if it's true. But he told me that he's got a friend that was an early investor, works for him. I don't remember. Basically talking about what SOFI is doing, what's in the works. That his friend told him that he needs to load up on SOFI because it's easily a $100 plus stock. So with that being said, anything could happen. But it's a cheap stock. SOFI is a good company. It has a lot of potential to the upside. We do have price targets being raised. So not only is it a good potential trade for today, but maybe for a nice little long-term investment as well on SOFI. He's loading up. He's putting 10, 20 into it. I'm not going to be that aggressive. I may put a few grand into it as a riskier, more speculative, riskier investment, not a slow, steady growth stock, but something that's a little bit more volatile. Definitely, a value stock. There is some value because it's cheap and it does have some good growth potential behind SOFI. So again, we'll see. And they do have earnings coming up early next month. So I think I'm going to start getting my feet wet with SOFI. It is pretty cheap right now. From the highs, it was at 28. We're at 16.21. So it is cheap compared to where it was coming off those highs. I think it's a good little opportunity to start getting my feet wet, maybe throwing a couple grand at it and see what happens long term. All right. So again, SOFI price target being raised. This stock right now is currently gapping up from around 16.21 to 16.92. I'm looking for a break over 17, and I think we could see this up towards around 17.74, that 200 SMA, and then possibly retesting those prior highs of 18 buckaroos here on SOFI. All right, so again, over 17, I think we have room to 18. Boeing! I'm still bearish on Boeing. We were talking about this morning on TikTok. I've been bearish on Boeing since August. We nailed these short here. Very big drop. We've been watching Boeing for the past week or two, waiting to see if it's going to get rejected off this downtrend, if it's going to get rejected off the 200 SMA. Look at Boeing. 1, 2, 3, 4 rejections at the 200 SMA, right? Still looking weak around this downtrend. Still bearish. I still think Boeing has room to fall back down to like 210, 206, maybe even lower right here on Boeing. So again, I'm still bearish on Boeing. I'm definitely thinking about grabbing some puts today and shorting Boeing off that 200 SMA rejection, okay? I like it. I'm very bearish on it. I'm like 70% bearish, but the one thing that we have to be mindful of is if, there's some good things coming out in the headlines being talked about, we see the overall market do well, regardless of the bearish technicals, Boeing, out of sympathy, market sympathy, can move to the upside as well. But as long as we continue to see a lot of these stocks perform bad, the overall market's struggling, we see the S&P falling, these bearish technicals should definitely help Boeing, again, fall as well with the overall market. So again, we just got to be mindful of that, put ourselves in a position that if the overall market does start doing well, and if Boeing starts doing well, we do not want to lose our asses. But I do like the technicals on Boeing. I definitely really want to start getting my feet wet with some puts here again here on Boeing. Okay, and then the SPY, right? The SPY. Very couple bearish days, right? We had a very bearish shooting star doji off the downtrend, off that 23.6 extension level, and we saw a nice little red day there on Friday with a little perk in volume, again, off the downtrend, off that 23.6 extension, and we had a nice little bearish doji formation there on the daily. We are seeing a bounce, and that's okay. We are bouncing off that gap fill at 435. That's expected. But right now, if we bounce off the gap fill level and we break back above the 20 EMA and then Friday's close, right? If we get back above Friday's close, we're back above that 20 EMA after we just bounced off this gap level, we could actually see the SPY rebound and reverse back to the upside. Most definitely. But if we bounce and we come up to that 437.83, that 438.11, and we see selling pressure, we see it getting rejected and it starts curling back over, we're still not in the clear yet, guys, and I still think we have some room down maybe to like 420 on the SPY. So with that being said, we need to watch the SPY very, very closely today. Is it going to hold the bounce level? Is it going to start re-breaking some of these key technical levels and start rebounding back into the 445 level, right? Maybe even getting back into those all-time highs, right? When we really start to see that confirmation, I think I'm going to start adding a little bit more aggressively to a lot of my long-term investments because we may be in the clear. But right now we're not. Today's going to be a very big determining factor on what we can expect to see the remainder of the week here on the SPY. Whether we're going to see a short-term rebound into the 445s, maybe even higher, or if we're going to get that proper rejection and if we're actually still going to be moving lower with the overall market, guys. Okay, so again, that's my options watch list. That's my intraday watch list, why I'm looking at everything, the news behind it, the credibility, the transparency, getting you guys prepared so we are all set, ready to rock and roll, and we are ready to crush this day. So again, guys, that's what I got for you. That's what I got. So news about BBIG. I did not see any BBIG news. Is there news on BBIG? Nothing today. BBIG is in a massive, nasty daily downtrend, looking very bearish on BBIG. No news on BBIG. I mean, on the 7th, which was last week, there was a little press release, but again, it wasn't anything crazy. NMTR from Lance. NMTR. I like the push. I like that little double bottom. It's putting in some higher highs, some higher lows. Definitely looking like we could continue to see this stock move to the upside. I mean, you have some resistance very close by, though. I mean, you have resistance at 146. You have resistance at 154. You have resistance at 163 with your support level back down around 137. I mean, not a lot of action in pre-markets. The very light volume mover. I mean, it trades under $1 million on average. The daily movement out of this is like 130 to 140. It moves like maybe 10 cents, 15 cents a day on average. I just don't see a lot of great upside potential. I mean, maybe to 163, right? But it's at 140, so you're asking for 20 cents. 20 cents of profit on NMTR, right? 20 cents before you hit a lot of key levels of resistance. Why don't we go find a stock that can move 20 cents in a minute, right? Versus 20 cents in a week. Now, I like the idea, NMTR, right? I like the formation. I like the technicals, but it just doesn't move enough, right? 10 cents is not a lot. 10 cents, 15 cents is not a lot. And again, there's not a lot of risk behind it, but again, it's not the greatest setup to really want to jump on in and tie up your capital for 10 to 15 cents over the course of maybe a few days or even a week. I would rather find something that has a little bit better of a technical setup, something that requires less capital with better return expectations, maybe like Boeing puts, right? Maybe putting some of that money into Boeing puts and actually seeing better returns, less capital, manage your risk still, better technicals, but NMTR may get to like that 163, right? Could definitely see 163. And right now your support is right around like that 137. Hey, welcome to the team. Woo! That's what I'm talking about. Angel bringing on his brother-in-law, Jay Marzan 4. Welcome to the team. You're going to have some fun. We absolutely love seeing new members and new faces here inside the chat. If you ever have any questions, comments, or concerns, you never hesitate to reach out. We are here to help you. There is no such thing as a dumb question. You ask. The only dumb question is when you don't ask one, right? We were all new traders at one point in time. There are literally so many questions you will have, and that's what we're here for, all right? So again, never hesitate, never hold back. If you need anything, reach out. We're all here to help. All right, all right, all right, all right, all right. So, guys, we have about 57 seconds to go. VYGR real quick. Yes, I just saw VYGR. VYGR, let's check it out before we get our day going. VYGR was a mover from last week, over 590. Room to 676. I was actually doing some technicals on this one this morning. All right, so VYGR team, over $6. You got room to 676 on VYGR. All right. So again, I was doing some technicals on this one this morning. Over that $6 level, we have room to 676 there on VYGR. Out of the gates, I want to watch PTGX out of the gate. I want to watch PTGX. All right, team, we got 5 seconds. Let's get ready to go. Let's have some fun, and let's have an awesome day, team. Denise, anything for you, Denise? Absolutely. You are more than welcome. If PTGX goes weak under that 200 SMA today, like we drop below the 200 SMA, retest it, and make a lower low, I'm going to short PTGX. I would short PTGX. Because PTGX has a long way to fall. 100 shares, $5 drop. I would take it. I would take it. All right, guys, on TikTok, my phone's getting ready to die. If you want another 15 minutes of stream, have some fun, join us over on YouTube. But again, my phone's going to die, so I'm going to go ahead and shut it down. Happy and safe trading, baby. Let's have some fun and let's make some money today, guys. Right now we have TRVI not doing too much. VYGR pulling back. This one has support. Down towards around 490 to $5 there on VYGR. AHER, I really want to see this pull back and fill the gap first. Ideally for a nice little swing trade. We got Roku. Below that 320. I want to keep this one on watch. I'm going to reset my alert to see if it breaks back above like that 322. So I'm going to replace that alert. If it pops back above like 322, we will be aware of that. They're on Roku. Maybe a little bit of a red to green move on PTGX. Maybe a little bit of a red to green move here on PTGX, guys. It's tempting. I would risk $100. I would risk $100 on PTGX, but I mean, it's only 2 minutes out of the gate, though. Only 2 minutes out of the gate. We could definitely see a little bit of this red to green move here on PTGX, though. But again, this stock is gapping up like crazy. So again, what do you think may happen? Maybe some profit taking? Maybe pulling this stock down a little bit further into maybe like that 31.76 level? I don't know. It's a brand new day. It's a brand new week with brand new opportunity. Are buyers in control or sellers in control? Right now, you got FLXN fading and falling. DATS not doing anything right now. CCXI pulling back a little bit. TRVI trying to get some action. VYGR pulling back. AEHR not doing anything. So, you know what? I'm going to take a quick little short here because we just put in a new low of day on PTGX. I'm going to grab a short on PTGX. Back above 33.20. That's where I'll cut this trade. Back above maybe like that 33.20 level, I'll cut this one. But again, profit taking, everything's kind of pulling back right out of the gate. We are briefly dropping below the 200 SMA. I want to see if this one can stay below that 200 SMA here on a PTGX. Oh, I had my level marked up wrong. Shit. That's my bad. Whoops. That's a no-no. That was a premature. I actually had my level drawn up wrong on that 200 SMA. So next 1 minute candle to make a new high. That'll be my stop out. Want to see if selling momentum continue to bring the stock down. I'll risk maybe like 33.50. I'm in at 32.90. I'll risk maybe like 33.50 on it because again, I realized my my support level was in the wrong place. So if I would have readjusted that, I would have never taken the short. So I'm gonna have to bring my stop a little bit closer to my entry just because I do not really. I'm not crazy. I'm just gonna get out of it. That was a mistake on my part, guys. We all make mistakes. Right when the market opened, I don't know what happened with my support level. So I'm just going to go ahead and walk away from that one. I thought we were actually getting that drop below the 200 SMA. We weren't. We were not. So we all make mistakes as traders, right? No one's perfect. We make mistakes. But when you realize you make a mistake, don't hold the bag. Just walk away from it, right? Just get out of it. Walk away. Last thing you want to do is, realize you made a small mistake and then end up holding it, right? So go ahead and just make a mistake. Okay, fine. Just move away from it. We are seeing that red to green move. We are starting to see that nice little red to green move. So breaking over 34.14, that's where I expect to see a lot of volume move in, guys. So breaking over the open on PTGX right around 34.14, that's where I would expect to see a good amount of volume move in to PTGX. So right now, I don't really spot any like great opportunity, right? If we really look at everything, you got PTGX trying to get that bounce, trying to get that leg up. Nothing crazy right now. AEHR is not doing too much. TRVI, quick little pop out of the gate. Rejected off that 50 SMA. Right now, coming back down the 146 support. We start cracking below that 146-ish level. We'll probably start just really fading and falling back down into the 130s. They're on TRVI. And one thing that I want to start doing, guys, is when we're typing tickers, NAOV, SNDL, putting something behind the ticker. NAOV, hitting new high of day, right? Something, not just the ticker, but something behind the ticker as well. That's something that we're going to start doing moving on. And if I start to see a lot of just tickers thrown out there, I am going to start deleting those messages just to clean up chat. Again, we want to be as credible and transparent as possible. So again, NAOV, new high of day, or a press release article if you guys see a stock moving on up because it was a press release. You see the guy, if the stock is halted, right? Hey, NAOV, stock halted at 221. Again, we want to just see more credibility for the new traders inside of chat, guys. So make sure you're putting something behind your tickers and not just a ticker, guys. I do appreciate it. SNDL. This is the large float stock, if I'm not mistaken. Isn't this float like $1 billion? Like this is $1 billion in float on SNDL. So we'll keep it on watch. It's definitely popping here a little bit today. No news, but it is bouncing a little bit. Right now you got CCXI, guys. I don't want to forget about CCXI, okay? CCXI over that high at 41.29 has a lot of great potential, team. Has a lot of great potential, and we see there's still some focus here. There's still some activity. There's traders still here on CCXI. In this stock, moved big on Friday. It could definitely move big again today. Right now, light supports right around 37.90 on CCXI. Right, back down right around 37.90 is a good little level of support here on CCXI. I still have my crypto swing. So again, BTBT is one of those crypto swings that I have. I have SOS as well and BTCM. Right, BTCM is not doing all that much. SOS isn't, but BTBT is the one leading these crypto-related stocks, and I was able to grab some options there out into January. I'm in the money right now on BTBT. Right now on BTBT, I'm in the money on these. So I'm curious to see what those look like today. Let's go ahead and open up Webull real quick and see exactly what those calls are currently looking at. right now, I mean, I still have a long time to go on BTBT. I still think we'll see a very nice little end of year rally in the crypto market. I'm trying to get this loaded up real quick. So yeah, BT is up 117%. So we got BT 120 percentage, and then I got my other cryptos that I'm in. You know, Bitcoin's up 26, XLM, yada yada yada. Cardano's down a little bit, BTCM's down a little bit, and then SOS is down just a little bit. But right now, BT, I had those January 2022 calls at 1250. Right now, those are in the money, and I still think there's a lot of great upside potential here on BTBT, so I'm definitely not thinking about getting out anytime soon on those. When I play stops, I do stops, right? Like just a basic stop, like a stop market order. I don't do stop limits because if the market's very volatile, if the stock's volatile, that stop limit order could be skipped or tripped. And the last thing I want to do is end up looking back and seeing that the stock's down $5 and my stop limit was never triggered. I would rather just go ahead and take a few cents of slippage, guaranteeing that I get out of that trade as a stop. So again, a stop is what I recommend, not a stop limit, because you take the risk of your stop limit being tripped. Yeah, so again, I do stop market. You gotta weigh out the pros and cons. Stop limit, if you're filled, you're getting filled at your limit, right? There's no slippage. But if you get skipped and tripped, the stock could fall as far as it wants and you're just not out. Stop market, there may be a little bit of slippage, but at least you're guaranteed to get out of that trade if it's volatile. 1250 strike on BTCM. I have the 1250 strike there on BTCM. All right, so again, I'm going January 2022. 1250 calls. So right now I am in the money there on BTCM. Yeah, EasyFL has that room to 440, 455, and then 480. They're on EasyFL. FLXN. FLXN. I like the idea of a short here on FLXN. I like the rejection off the 9 EMA. I like the rejection off the VWAP. A little bit of this bearish flag formation here on FLXN. And it does have room to fall back down to the 200 SMA, guys. And again, the acquisition price was right around $8.50 a share. So from a what is this company worth standpoint, the company's worth, $8.50 a share from that acquisition. And again, your support is all the way down at $8.70 here on FLXN. $8.70 support. Right now, you have that VWAP resistance. You're seeing a little bit of this rejection. It's trying to get rejected here on FLXN for the possible leg lower here. Again, off a big drop, this consolidation formation right into the 9 EMA and right into the VWAP as well. Right now, VYGR still fading and falling. TRVI not doing much. Not too much happening with DATS, but again, CCXI is the watch, guys. CCXI is that #1 watch. So again, CCXI over that high of $40 and I'm sorry, 41.29. This is where CCXI could take on off to 44, guys. That's where it could take on off to like 44. It's going to be there on CCXI. Nice. We got some big profits there on BTBT. That's what I'm talking about. That's some good stuff right there. Good stuff. Good stuff. So right now, we have some momentum. Nice push, consolidate, push, consolidate. So right now, 39.50 support. 39.50 support on CCXI. I would say 39.50-ish light support. Maybe 39.40 would be better light support here on CCXI if we're going to get that next leg up to 41. So CCXI has a lot of decent momentum behind it right now. CCXI has a decent amount of momentum behind it right now. Right now, again, resistance is at that 41.28. Right around that 41.28, 41.29 resistance there on CCXI. Yeah, CCXI, you got SOFI was another one that we were watching today as well, over 17, guys. SOFI over 17 was room to 1801. Roku is having a good day as well. Over that 322, guys. Remember, over 322, this one had some good room to the 340s. Roku's doing well. We still want to watch SE. SE has some great potential as well. Netflix, you know, I'm definitely going to be watching Netflix this week. How's Boeing looking? Boeing, I may start thinking about some shorts, guys. I may start thinking about some shorts here on Boeing. Some puts. Maybe some Boeing puts. Right now, but as far as, you know, top, I guess I would say penny stock. Not really a penny stock, but top, you know, small price, low flow stock. You got CCXI, guys. You have CCXI, and CCXI has a lot of great potential as well. EZFL right into the 440s there on EZFL, right into the 440s. See if we can really start to see this drop now here over on FLXN. See if we can get this to drop a little bit now on FLXN, guys. I think it has good potential down to that 200 SMA. 5 minute looks good. 5 minute looks like it may be closing back below the VWAP. We got a rejection right there off of the 9 EMA there on FLXN. So again, let's see if we can continue to see sellers pull this back down, at least back down into the low a day at like 934, and then seeing if sellers can continue to bring this even lower down below that 934, down into the low $9 area there on FLXN. Again, AMDS, guys, AMDS, or ADMS, I'm sorry, ADMS was the acquisition, right? Was that acquisition at 8 to 850 a share? So I don't really expect to see too much happen here with ADMS. I mean, maybe back up to like 830, but again, it was that acquisition news, and typically acquisition isn't really worth your time. Usually it moves a little bit, but for the most part, it kind of just sits sideways. 780 support here on ADMS, 780 support on ADMS with 830 resistance. I need to get back over to my FLXN trade here, guys. If it's going to crack 950, I may consider locking in some profits. I want to see this dump below 950. As you guys know, I am currently in on FLXN, looking for the crack below this 950 here to the short side, off of a nice little 5 minutes reversal. A little bit of a 5-minute rejection, right? Nice big leg down on heavy volume. Two-legged pullback into the 9 EMA, back below the VWAP. That's a decent little short setup, and we could continue to see sellers pull this down lower into the low 9s here on FLXN. So again, I am currently short on FLXN, looking to see if we can get sellers to crack this below 950 here. See if we get sellers to bring this down below like 950. I'll risk maybe 10 cents on this. If this one pushes back up above 960, 965, you know, I'll stop out of this one here, but I want to give this a chance to see if sellers are going to continue to try and pull this to the downside here a little bit. Down into the 9s, maybe even like 870 here on FLXN. Right now, there's the 9 EMA again. It actually may not get that little sell-off. You know, I don't want to prematurely get out because I still don't see the buying volume supporting these little bounces, these little jumps, and it still is below that 5-minute 9 off of a little bit of a 2 to 3-legged pullback, which is a short setup, which is a bearish setup when you see those little 2 to 3-legged pullbacks. So I'm trying to be as patient with FLXN as possible here, guys. Looking to see if sellers bring it back below like 960. Ideally, that 950 level is that level that I'd really like to see crack here over on FLXN. Right now, it's trying to pop up here a little bit. It may actually try and get a little bit of reversal and actually move over the open. So if that happens, you know, gotta walk away. I want to see if buyers can fall back below 960. If buyers can fall back below 960 and we can get the ask down below 960 as well, I think we may start to see this turn on over here. We still got about 2 minutes on this 5-minute candle. Anything can happen in 2 minutes. Anything could happen in 2 minutes. So again, my finger's on the trigger right now with FLXN. Again, I'm just short on FLXN right now. Looking for that nice little reversal and that rejection off that 9 EMA here. So again, we got about a minute 70 to go. Not a minute 70. Minute 30 to go here for this 5-minute to close out. I'm looking to see if we can get that drop back below 960 and start to see sellers move back in, possibly getting this crack below 960 here on FLXN. Buyers are really fighting to keep it above 960 though here. If it doesn't start falling back below 960 in the VWAP here on this 5-minute candle, I am not going to hold this for the squeeze. I'm not going to hold this into like any kind of squeeze. It is fighting to get that pop over the 9. But again, while it's underneath that 9 EMA on the 5-minute, it still is setting up for a possible short. And right there, it started the squeeze. I'm not going to take the chance there. I'm not going to take the chance there as buyers really start ramping on up. So yeah, we got right now, PTGX got a nice little pop there. I mean, it looked like it was going to fall a little bit lower down to like 3176. But PTGX actually got a nice little pop. Now we're starting to consolidate here towards the highs. And a little bit of this flag formation. FLXN is still looking like a good short. FLXN still looking like it could be a little good short below 950 here. That one candle just got me out. That one candle chopped me out there a little bit over on FLXN. Now it's trying to drop below that 950 here a little bit. Now it's starting to drop below 950. Let's see if we can go like a new low a day here. Maybe a little bit of a new low a day here on FLXN to the short side, guys. It's still, yeah, it actually closed back below that 9 EMA. That one little candle kind of chopped me out and faked me out there a little bit. But now we're actually starting to see that little bit of a drop below that 950 here. We may see that 9 EMA cross the VWAP on the 5 to the downside, which is bearish. And now we're starting to see FLXN starting to get a little drop here, guys. Now we're starting to see a nice little drop here on FLXN. Right now, let's see if we get a new low a day. If we crack below 930, guys, we could definitely continue to fade and fall. Back below 930 here on FLXN, we could definitely start to fade and fall here a little bit. We're looking at this on a 5-minute chart, right? We're looking at this one on a 5-minute chart. Again, we're starting to see that 9 possibly cross the VWAP. We have those proper rejection candles right off the 9 EMA, and we actually closed back below the VWAP as well. Now we're starting to see those sellers move on in, and we're starting to bring this on to the downside. So I want to see this cracking below that 930, and if so, we could see a quick drop down to $9 here on FLXN below 930. Give it a few more moments. You got a pretty decent buyer at 938. Let's see if we can take him out. He's got down the 13K from 40. Okay, here we go. Let's see this dump a little bit more. Let's see it drop a little bit more here on FLXN. There's 932. Let's see if we can get the 930 crack. I'm trying to be patient with it. Looking to see if we get a nice little 930 crack here. Can we crack 930? Can we crack 930 here? It looks like it wants it. It looks like it wants to crack that 930. Let's see if it can crack below 930 here. May bounce off low a day, though. It may bounce off low a day. Give it a few more seconds. 936, 935 on the bid. Can these sellers get this below 930? Can we get it below 930? There's 933. 931 from the buyers. Let's see that crack at 930. Let's see that 930 crack. Let's see that 930 crack here. There's that 930 crack, and I'm going to go ahead and lock in those profits. I'm break even now on that trade. So again, that first one right here, guys, that first trade did stop me out because I was a little cautious. I didn't want to see that squeeze on up. But right when I saw that candle close back below the VWAP and we had that proper 9 EMA rejection, we're starting to see the cross, I jumped back in and I was able to get back about $150 of that prior loss, only taking me down $11 there on FLX into the short side. So I had to jump back in that one. Right when I saw it, that is a perfect short, guys. When you see a nasty drop on the 5 and you see a 3-legged pullback, in this case it was like a 4-legged pullback into the 9 EMA, still getting rejected below VWAP, that is a beautiful short, and that's why I was initially in about 1,000 shares to the short side. That one candle concerned me, or that would have been a solid trade. That would have been a beautiful trade if I didn't get shaken out, but then I jumped right back in, guys. I jumped right back in because it set up again, and I still liked it. And right there, nice big drop, about 30 cents to the downside. More highs on ANY. Do you see any entry on TRVI now? Do I see an entry on TRVI? I do not. There is no volume here. There is little to no volume on TRVI. This is a risky trade. It's in an intraday downtrend with light volume off, light support. I think there's better opportunity besides TRVI if you ask me. I think it's just a little on the riskier side on TRVI. I think it's just a little bit on the riskier side there. Yes, you can trade crypto on Webull when the market is closed. Absolutely, right? Crypto trades 24/7. You could absolutely trade on Webull, that market, as it is open 24/7. Do we have anything with Netflix? Not yet. Do we have anything with SC? Not yet. Do we have anything with Roku? I missed that 322 entry. I missed the 322. I'm not going to chase it. What about Boeing? How's Boeing looking? Boeing, well, actually, let's go look at the SPY first. The SPY, guys, is still right in this downtrend, right? So we're still not in the clear. We're not in the clear. If it gets rejected off this downtrend, we could actually see the SPY starting to turn on over, and that may make me a little confident to maybe start a Boeing short. Maybe make me confident to start a little bit of a Boeing short. ANY is coming into a big wall of resistance, right? ANY is coming into 750 resistance. Now, breaking over 750 on ANY, you could see 767, you could see 786, and then you could really see this take on off back into the 9. So you got a lot of little levels of resistance that we got to clear first here on ANY before we have this big window of opportunity up towards around like 940. Again, AEHR, maybe it's not a today trade. Maybe AEHR is not today, but I like the idea of a possible swing trade. I like the idea of a possible swing trade there on AEHR coming maybe sometime this week. Yeah, there goes PALT again. You're still seeing the stock bounce around a little bit. That's all, guys. This stock had a lot of hype a couple weeks ago, pulling back, bouncing, just starting to bounce up a little bit. I still don't trust it enough here to take it long or anything. How's CCXI looking? CCXI, quick new high, starting to pull back. And again, CCXI has that 39.37 support. So I would actually bring you up a little bit and say 39.56. 39.50 to 39.56 support here on CCXI. I posted PROG this morning in our morning stock newsletter, and I posted PROG here in alerts. So this morning, PROG at 8 o'clock this morning, nice healthy daily pullback after the rip to 214 2 weeks ago. We're sitting right at that 125 level of support. And again, we have potential to bounce for the leg up to 150 and then 2. Right here, we just hit 168 after holding above that good level of support. So again, PROG had been something that was on watch, and it was posted in the morning stock newsletter. So right now, the top stocks, if you ask me, Josh, what are the top stocks? Where should my focus be? EZFL. EZFL over 440, room to 455, room to 480. That would be one of my top watches. PTGX over 37.23. There's a big window, guys. Big window, possibly to 44, but we need to clear that 50 SMA first, which is right at 38. So honestly, over 37.23, room to 38, but then over 38, a lot of opportunity and a lot of potential to the upside. They're on PTGX up towards around $43.80. So those are my top watches, right? Those are my top watches. EZFL over 440, you have room to 455 and 480. PTGX over 37.23, you could see 38, and then that big window up to 43.80. That's another top watch, guys. And then CCXI. CCXI above 39.50 support. We could see this back up to 42, and then we could see it up towards around 44, guys. Hogwired, what is a large bid-ask spread usually indicative of? Low liquidity. No liquidity, no volume, no traders. So again, when you don't have a lot of liquidity, you don't have a lot of traders in a stock, you have a spread between bid and ask. I wouldn't say that that's a good opportunity. I would say that's a risky trade because again, with large spreads, low liquidity, the stocks can move very quickly against you because of those spreads are so large. So the last thing you want to do is jump into a stock that has light liquidity, which basically, if you want to keep it simple, liquidity is the amount of traders on a stock, right? Let's say you have 100 traders in the market and 80 of those 100 are on CCXI. The spread is nice and tight. There's a lot of liquidity. There's a lot of orders. And let's say that there's like 5 of those 100 traders on another stock, right? The spread may be $1 and it's risky because there's not a lot of attention and it's not going to move as much. And again, it can work against you pretty aggressively. If you're already in the stock, just make sure you have a plan, right? You should have had a plan before you were in the trade. Make sure you have a plan. Make sure you have a stop loss. Make sure you have a target. If you hit target, take profit, right? If you get stopped out, get stopped out. But again, make sure you have a plan and you know your exit strategy and you know your stop loss. FLXN, that is coming off watch. It's dying down a little bit. It was a good little short out of the gate, but right now, not too crazy about it. I'm watching PTGX here. Again, nothing's really set up yet, guys. Nothing's really set up for like a killer trade. Maybe PTGX holds a higher low. So again, I'm just watching PTGX and CCXI right now. Those are my top 2 stocks. CCXI and PTGX are going to be the top 2 stocks. I want to see if PTGX can form a higher low somewhere. There's some momentum. It is really grinding that 9 EMA, and we could easily see this break on out over $37 here on PTGX and start to get a nice little move to the upside. Again, right now you only have one reason of support here. You got one reason, and that's the 9 EMA. Maybe that pre-market high as well at 36, right? Maybe that pre-market high at 36 and the 9 EMA. You have a couple separate reasons why 36 can hold, but it's just a little risky in my opinion. Again, stops that have to be at like 34.63, and that's just too big of a stop from a reward standpoint. Yeah, CCXI, next resistance is around the 42.16, $42.16 there on CCXI, right? CCXI is the high day resistance, right? $42. $42 is resistance there on CCXI. And right now, if you're in for any reason, stops need to be underneath that low and the VWAP of 39.80. So your stops have to be like 39.80 because you could fall. I mean, if you wanted to risk a little bit more, you could put stops below 39.50 because you do have some support down there. But again, stops would have to at least be under that level, right? You wouldn't want to risk it because it could fall all the way to like 38.50. PTGX looking like it may have some potential here, depending on how we look. It's definitely trying to fight to hold on up. Now it's starting to get some action here over on PTGX. Could go for a little bit of a cup and handle breakout, guys. Could be seeing a little bit of a cup and handle. Stops to be at like 35.68. Right now it's at 36.37. So we could be seeing a possible setup here for a cup and handle on PTGX, guys. Right, and stops to be underneath that candle low, 35.70. So 35.70, 35.20 entry, 50-cent risk, room to 38. There's definitely some opportunity there, guys. Definitely about $1.50 to the upside, 50 cents of risk on PTGX. So I'm thinking about an entry on PTGX. Maybe get my feet wet with a small little starter position for that potential cup and handle. So right now we want to see it holding the 9 EMA and we want to see a nice push off the 9 EMA. Want to see a nice little push there off that 9 EMA here to really start to get this going if it's going to get a possible little cup and handle push here on PTGX. So one push, that'll definitely get some interest here. One little pop, one little push from the buyers would definitely bring some attention into PTGX to see if we can get this going up over that $37 level, guys. But right now it's looking a little bit on the iffier side, right? Looking a little bit on the, doesn't know if it's going to get that little pop here on PTGX. It's fighting to stay, like, it's trying to fight to stay above that 35.90, but it's just, it's a little jumpy. It's, you know, up and down, up and down, up and down. But again, it's definitely fighting to get that higher low to possibly get a break over 37, coming on up to like 38 bucks here on PTGX. That's not a good candle right there. That's a really iffy candle. That's a, I'm probably going to fall candle. That's the, hey, I'm going to just fall. Based on that price action and that candle open in the formation there, that's a, I'm going to dump on down here. And look at that. Starting to curl on over here on PTGX. Starting to curl on over a little bit. Right now, I mean, there's opportunity, guys, right? There's opportunity, but like Chris said, market kind of feels blah. You know, some, you know, random pops. Like, that was a pretty random spike on PTGX. I mean, if you were already in this, you would have caught it, but looking at it in hindsight, I mean, there was, like, no validation, no entry there as far as, like, a good setup. Just a pretty random pop, first pullback to the 9, and now it's starting to curl on over. So PTGX, not really doing all that much right now. CCXI, still waiting for this bad boy to set up. I still like CCXI a lot here, guys. I do like CCXI. And I'm wanting to trade CCXI on a 5. Right? You got the VWAP, you got that 9 EMA. Kind of a little bit of a flag-like formation. So right now, let's just keep an eye on CCXI here and see how we set up for a possible move back up to like 42 and then 44. And there's the SPY right off that downtrend on the daily chart. So right here, right now is a key level. Right around 440 on the SPY is a key level. A break and hold of 440, we can see 445. Rejection off 440, we can continue to see the SPY drop which is going to make me want to jump in to those Boeing puts. So I'm definitely considering possible puts on Boeing if we see the SPY reject like we're starting to see here off that 440. You guys are still watching PALT. PALT, watch for a break of the downtrend. Watch for a break of the downtrend. You have 875 support. 875 support here on PALT. Watch for a possible break of the downtrend. You have room back to 930. And then you could possibly see this back up at like $10 here on PALT. So definitely keep PALT on watch here, guys. Break of the downtrend, you have 875 support. We could definitely see this up to 930 and then 999 there on PALT. Again, ANY has a lot of resistance we have to clear before we have a big window of opportunity. So again, if you're watching ANY, you have to clear 750, 767, 786 before you get this nice big opening where this stock could start really taking on off. Again, PROG was a trade from our morning newsletter. So right now, PROG getting that nice daily reversal. So right now, I like PROG in the way it's moving. I like the slow, steady, consistent movement out of PROG. And what could we possibly see here on PROG coming on up? All right, what could we possibly see here, right? We got a nice big leg up into the high of day. Nice U-shape. You know, if this stock pulls back, puts in a higher low, maybe we see a nice little higher low push for that next leg up. And again, we do have some nice room towards around like $2 next, right? Right around $2 and then maybe $2.14 there on PROG. So I do want to keep PROG on high watch just because it's a nice consistent mover, right? It's not super volatile. It is nice and consistent. The technicals look good. And if it's a cup and handle, maybe we get a nice little 50% retracement. Right? Maybe we see this down for a nice little 50% retracement and double bottom, and then we start to see that pop over the 170s. Again, we have a lot of room to like $2 here on PROG. So I do want to keep PROG on high watch. CCXI is starting to fade. CCXI is starting to kind of turn on over here. Right, CCXI is starting to turn on over a little bit, so I would be a little cautious there with CCXI. And of course, we have DATS getting some hype behind it. And ANY has to clear a lot of that resistance. CCXI is starting to put in that lower low. We're in a downtrend now. So all we need to do right now on CCXI is be patient and wait. Go ahead and start a downtrend on the trade. And if it ever sets up for a possible break of the downtrend, we'll be prepared. We will be ready to go. Support right now, back down towards around that lower shadow. Right around 38.57 would be your next best level of support here on CCXI. Maybe we see this stock set up for a possible break of this downtrend here on CCXI. Again, we got CCXI possibly setting on up. DATS has 1240 support, $13 resistance. But again, DATS was another stock on watch, and we have room up towards around 1470 there on DATS. So again, top stocks, all right? I want to keep you guys updated. I want to make sure you guys are updated. Top stocks, PROG, cup and handle possibility, room to 2. PALT, break of the downtrend out of this flag formation, room to 930, and then $10 on PALT, guys. Stops to be under 875. ANY, you got a lot of resistance to clear first. I would not be looking to take ANY long right now because there's a lot of resistance overhead. You have better opportunity. Right? PTGX supports right here around 34.88. We're inside of a little bit of a channel, right? Top channel resistance is at 36.77. Bottom channel support right here is at 34.88, okay? So right now on PTGX, if we hold above 34.88, boom, we can see it back up towards around 36.77. Then CCXI, we're just waiting for the stock to form a bottom off support, set up with a higher low for the possible break of the downtrend. We call that the boom, boom, bang. So again, we need to sit back and wait to see if we're going to see that possible setup here over on CCXI. Still watching the SPY. 440 is a key level of resistance. We break above that, probably start to see it push higher. We get rejected, probably start to see CCXI, or I'm not CCXI, the SPY start to fade and fall just a little bit more. SoFi, SOFI, you know, it looks good intraday, but when you look at the daily chart, yeah, it has room to 18. You got that 200 SMA right here as well that you should be mindful of, which is 1777, about 20 cents away. Breaking 1777, your next target is $18 there on SOFI. Right now, again, I'm waiting for CCXI to set up, guys. I'm waiting for CCXI to set up. False move there. And this is why I teach you guys how to trade flags. Do you guys know how to trade the flag? We've done a lot of lessons on bull flags, right? Where's your first target on a bull flag and why? And if you guys don't know, I'd be more than happy to explain it. Because we saw a perfect example on why we have first targets on bull flags, right? And the reasons why. And we're actually seeing that unfold here on PALT. Still watching PROG, looking to see where this is going to come on down and possibly level on off for a possible break over the highs for that next leg up. All right, PROG, guys. PROG, I like it. I like PROG. I like how we just came down and bounced off that 50% fib. I could get away with a 160 stop. That's 10 cents, $100. That's a 1,200 shares to start here on PROG. I like the possibility. I like the opportunity that I see here with PROG. I'm going to wait a little bit longer just to make sure it's really setting up properly. And my stops would be underneath that low. I would do a 160 stop. We're looking for a cup and handle formation on PROG, guys. Looking for a possible cup and handle on PROG. I'm going to take a starter on PROG, guys. Taking a starter on PROG. I like the price action. I like the movements. I like the consistency. I like the technicals, and I like the opportunity that we have here on PROG for a possible cup and handle breakout. And again, I think PROG has some good room to like $2. Not saying it's going to get there in one shot, but slow and steady, I think PROG has some good opportunity. So again, I'm long on PROG, 166 cost basis, 1,200 shares. Again, stops underneath that 50% fib, underneath that low point at 160. I'm risking 6 cents. Looking for a break over 170, and again, I see room to like $2. So looking from a risk-reward standpoint, it's a very good risk-reward. Very good risk-reward, but we have to actually start breaking for this potential cup and handle, right? And what do we know about cup and handles? When we see the big U-shape and the handle starting to form, we really like to see the handle form at the 50% retracement. And what did we see? We saw it come down and push right back above the 50% retracement with a strong bounce candle, a strong candle here for the bounce. So that is a good indication that we could see buyers move this up over the 170 to get this going for a possible cup and handle formation. Still watching CCXI here, guys, for a possible downtrend break setup as well. And we're actually coming right down into a nice level. We may have a really nice trade on CCXI coming on up very, very soon, guys. So CCXI is on high watch. PROG for the possible cup and handle. I'm long at 166. So I have a lot of Thinkorswim, TD Ameritrade tip and trick tutorials on how you can, set it up. You can link things, kind of some cool features and functions with TD Ameritrade. Those are going to be on YouTube. So you go to YouTube, Alpha Day Trading, and just go through the videos and look for TD Ameritrade Thinkorswim tips and tricks, little tutorial videos that I put together a couple years back. Again, kind of walking you through TD Ameritrade, how I have it set up, how to get it laid out. Again, just to kind of get you up to speed, with how TD Ameritrade works. Right now, looking for that break here on PROG. Looking for this break here on PROG, guys. Right now I have 5,000 shares of PROG looking for the break. I have 5,000 shares of PROG and I'm looking for the break over the highs. Off the cup and handle. It's not moving the way I want to see it move. We want to start to see it over 170 here. Big buyer there, big buyer. 150,000 shares of PROG, 150,000 share buyer at 167. Let's see buyers push this over 170. Can buyers push over 170? I'm going to take half because I was aggressive on size. Taking half at high a day just to play it safe. Taking half at high a day. Want to see this hold on up now. We got to see this hold on up and start pushing 170. Do not want to see it struggle. We do not want to see it weak. We do not want to see it move back down. We want to see consistent new high of days, especially for the cup and handle. Want to see this over 170. All right, I'm going to go ahead and lock in that little baby profit because I'm not liking how we're doing at the high of day. It's not what you want to see, guys. You do not want to see a stock go for a breakout formation and get rejected, right? We just got rejected at a new high of day. That's not really what you want to see. That's a sign of weakness. And in my opinion, that's a sign to get out because we could pull back down into the 160s. And the last thing you want to do is hold 5,000 shares for a 10-cent drop, especially when you're not seeing the type of move that you should see on a particular pattern. What do we know about cup and handles, guys? What do we know about cup and handles, right? They're continuation patterns. You have a flat level of resistance. The stock moves up into resistance, high a day. Pulls back, U-shape, high a day. And you get that higher low momentum push. These are continuation patterns meant to break over on the third point and break out, right? When you see a stock get that high a day and it looks good and then it comes right back down, that's a sign of weakness. I'm not going to risk holding it. I'm not going to risk holding it because it could dump on down. Now, could it transition and still break? Absolutely. That's when you can jump back into the trade. That's when you can jump back in. The last thing I'm going to do is knowing what a cup and handle should look like. Knowing what a cup and handle should do. And I know a cup and handle should break over and momentum move on in and push it even higher, right? It's a continuation pattern. When I don't see that price action, right, I'm not going to take that chance. I'm going to get out. And look at that. That's why we get out of those trades when they don't work, guys, right? That's why we get out of trades when they don't work out the way they're supposed to work out. I'm not going to sit here and hold the bag, right, and hope that it works out, right? I could have taken a break-even trade, pretty much break-even after commissions and fees, okay? I could have broke even on the trade, right? I did break even on the trade, or I could have turned that into a $500 even or $500 loss, knowing how patterns should play out. And when you see a pattern not play out, that's an indication to just go ahead and walk away. Sorry, guys. We had a little bit of a buffer there on the live stream. I do have someone helping me with my OBS coming on up just to make sure that we do not continue to drop any frames during the stream. I think I just have my settings all jacked up on on OBS. So right now it's an up and down market, right? It's a little bit on the choppier side. Little bit on the choppier side here today, guys. Right? You know, we have some good setups. PROG, come on, guys, let's be real. That's a decent setup. Nice cup and handle off the 50%. The volume was looking good. Everything was looking good. And we had 150 share buyer. 150,000 share buyer step to the plate. That shows strength from buyers. And then when we can't break into the new high, starts pulling back, shows a lot of weakness in the market right now. And right now, we have some decent setups, but we're also seeing a lot of false moves. Look at the flag break. Look at that false breakout from the flag. That's a no-no. Look at that false breakout off this cup and handle on PROG. That's a no-no, right? Again, we're starting to see a lot of false moves in the market, which is concerning, which means we need to be mindful that we're seeing a lot of false moves. What does that mean? We lock in profits quick. We lock in profits very, very quick, or we think about shorting these false breakouts, right? Maybe shorting some of these false breakouts. Shorting these false breakouts because we're seeing quite a few of those in the market, guys. All right. So there's just something to be mindful of. Now, CCXI. Now, CCXI is possibly setting up here for a possible little downtrend break. So I do like CCXI here. Want to keep CCXI on high watch. SPY is rejecting up here, which is a good sign that we could start to see it curl over. Look, I mean, it's just rejection, rejection, rejection. If the SPY starts cracking back below 439.70, I think we start to see it turn on over here, right? But if it consolidates and breaks out of the consolidation, all right, we're good to go to the upside, at least next to 441.50 to the long side. 441.50 next here on the SPY. But if it does start cracking and we see some selling pressure move in, hey, let's get ready for some possible puts here on the SPY. So as far as stocks that are up, you still got Netflix that's up on the day. I'm waiting for this to pull back to 615 before I touch it. BABA was up. Lowe's is up, breaking out here a little bit. Home Depot's up. Goldman Sachs. Some of the bank stocks are up a little bit. JP Morgan. Is JPM up? No, just Goldman Sachs. So right now, CCXI team. CCXI for a possible nice little break of this downtrend coming on up. 38.64 is support. We're at 39.20. We are off support, trying to get a nice little bottom and a nice little reversal. But here's the thing. The fact that I'm seeing a lot of stocks setting up for good setups, right? It makes me hesitate on the next setup just a little bit. Even though this is a good trade. This is a good little momentum trade. A nice little reversal to start to see that momentum move back into the upside. I like what I'm seeing on CCXI, but the fact that I'm not seeing stocks hold up. PROG, not holding up. PALT false breakout, it does make me hesitate and it does make me a little concerned about jumping in. So what I may do is scale back today on my size, right? Scale back or really just wait for a stock to prove itself. One of the two things. Scale back or let a stock prove itself. And right now, I'm not looking to be the guinea pig, right? I don't want to be the guinea pig, right? I want to see a stock prove itself before I decide to jump into the long side. And if we start to continue to see a lot of rejections and a lot of false breakouts, I'm leaning more to the short side today, guys. So let's see if CCXI is going to prove itself. Let's see if we still have some buyers here in the market to push these plays higher. And today I got a really fun lesson for you guys today. All right, today I got a very nice, fun lesson planned. So make sure you're here right around 11:30. We're going to be diving into our afternoon lesson. A little bit of a quick 10 to 15 minute topic, and then we're going to be diving into a lesson as well, guys. Now, once BTBT breaks that 200 SMA, you can see a nice, $2 move to the upside on BTBT. So, right now, BTBT breaking over these highs, which is that 200 SMA, right? We could see a nice little push. 1350, 1450. There's definitely a lot of opportunity here on BTBT. Look at PROG. That's why we get out. That's why we have to understand patterns. That's why we have to have good risk management, right? My stop was below that lower shadow, right? My initial stop for my initial entry was down here. But when I saw that false breakout and that move not play out the way I want to see a cup and handle work out, I can go ahead and get out sooner than later. I don't have to hold it all the way down to my stop. If I don't see something I like, I can go ahead and get out in the moment, right? In the moment, I'm not seeing what I like, I go ahead and get out. You don't have to hold it all the way down to your stop. If you don't like something and it's not playing out the way you anticipated it, right? Go ahead and get out. You could always get back in if you want. So again, right now, team, we're about an hour into the market. About an hour in. PROG out of the gate, nice movement to the upside, but right now we're starting to see a lot of stocks fade and fall. PALT, pretty random pop. Nice flag, nice break, but again, false breakout, got slammed really, really hard. ANY, it's just got a lot of resistance overhead, guys. I would not be touching this until we can start proving that we're going to break over resistance, right? And we're having a hard time getting over some key levels of resistance today, guys. You got a little bit of a bounce on BBIG. A little bit of a bounce here on BBIG. Coming right into some pretty strong resistance at that 532. So before we get excited, you got to dive into those daily charts, right? Look at that big gap up, right? When we closed and gapped up, 530. Look at how we came back up and retested it here as resistance, as support, as resistance, and again today as resistance. If it ever breaks and holds above that 530 level, your next level is going to be 560. So you have like 30 cents to the upside as far as profit potential, right? You have a good 30 cents. Where would your stop be if it breaks out underneath the prior low? Maybe like a 520 stop on BBIG if you guys are interested or if you guys are long. Right now, PROG, we can go ahead and remove that fib. We can take PALT off watch. ANY, we already know what's going on there with ANY. PTGX is just fading and following. Right now, can we run a downtrend on here? Absolutely, yes we can. Let's see if this one may be set up for a little bit of a downtrend break. It looks like it's trying to reverse here. PTGX looks like it's trying to reverse here a little bit for a possible break of the downtrend for a leg up into that VWAP right around 3468, guys. And watching DATS over 13, we have room to 14 bucks on DATS, but support on DATS is still back down at 12.40. It's about 60 cents away as support. You do have about $1 to $1.70 of upside potential. You guys are currently in DATS. And again, support right now is back down at 12.40. Again, I'm not looking to be a breakout trader right now. I'm not looking to be a breakout trader because we have not seen a lot of stocks break and hold, right? We haven't seen a lot of stocks break and hold. The last thing I want to do is go in for this nice breakout on DATS and see it come right back down 1280 and then dump and fall. Right now, let's see if it holds on up. Don't want to be the guinea pig, right? Don't want to be the guinea pig because what can you do, right? What can you do? Instead of buying the breakout and then possibly getting caught up in a dump, what can you do? Wait for the stock to prove that it's going to break out. Let it break out. Let it come back and pull back, then make your entries on the pullback, then go long on it. At least you're letting it prove itself that it's going to break out. You have a moment to read the volume, make sure it's a strong breakout, let it pull back to old resistance, new support, and then look to go long. Then look to go long, right? But don't be the guinea pig getting caught up in a possible fake out breakout. So right now, if you want to go long on DATS, look for the stock to pull back to 1305. I'm still watching CCXI here. Still watching CCXI. This is like one of my top plays. We have this nice validated downtrend that we broke, right? Boom, boom. Nice break of the downtrend in the VWAP, pulling back to old downtrend resistance as new supports. We could definitely see this level off that downtrend support, get a nice higher low, see some buyers move in for a break of the VWAP. So again, nice little retest of old downtrend resistance as new support. Looking to see this put in a higher low, start to see some volume move in for a possible break to the upside here on CCXI. So 39 support, give or take, on CCXI to see this hold above, higher low for a possible break of the VWAP. CCXI right now is one of my main watches. DATS, pull back to 1305. 1305 pullback for the next leg up. CCXI, just when we say, hey, there's some possibility, there's some opportunity. Right now, it's looking weak. Right now, it's starting to fall back on down below that trend line. So again, I'm not really liking what I'm seeing on CCXI as far as, current price action, current movement. Right now, I mean, it could still hold up. It could double bottom. That downtrend is very subjective, right? Traders may not even be looking at that downtrend. So again, we just kind of take a step back, come down and bounced off support. Coming back down, possibly bouncing off support again. Let's see if we have a possible reversal. Now, if we crack below 38.50, we have room to fall all the way down to like 36.70 here on CCXI. So let's be patient and let's see if this one would actually set up. And I'm watching DATS. I'm watching the DATS. Nice, healthy, decreasing volume pullback right into this level of support. We have a little bit further until we hit support to a penny, but it was a nice, healthy, decreasing volume pullback into that level of support. Again, we came down to 13.14. Support was at the highest, 13.08. So, about 6 cents above. Definitely not a bad little entry off the pullback if you guys were getting in. Stops have to be if the stock falls back below this level of support. If DATS falls back below 13, you got to get out. And look at that. It's starting to look weak on DATS. Team, what are you thinking about the market today, guys? What are you guys thinking about the market? You absolutely love it? You kind of like iffy like me? Kind of like concerned that, there's some good trades. There's some good setups. But it doesn't seem like anything's really holding on up. That's what I think. I think there's some good trades. I'm seeing some good setups. Setups that I would normally jump in aggressively on. But I'm not really seeing a lot of these technicals hold up. What are you guys thinking? What are your thoughts on the market today? Yeah, the SPY failed that level. Like I said, if you see selling volume moving at that level, that's a good indication to go short. Can you risk $1 on the SPY? Sure, right? Look at the delta. So if you're like, okay, I want to buy 2 contracts at the SPY, right? Let's say you go into the SPY, expiration, and you're coming into a 25 delta. Let's say you buy the puts, right? You're looking at puts. You come in here and you're like, you know what? I'm going to buy a 438 put. You bought 2 of those, right? That's an $80 investment. If the stock drops $1, you're risking $26 a contract, right? So you got to do the math around the delta. Can you get away with risking high a day? Can you risk high a day? Could you risk $1 to possibly see this crash and dump all the way back down into the 437s? You got to ask yourself that question. What's your risk? What's your reward based on the chart? And then go look at the delta, right? If you're risking $1, you're risking the delta. So again, if you're looking at today's expirations, if you're risking the delta, you're risking pretty much the entire contract of the option, depending on what strike you go with. 436 put, you're risking 100%. You're risking 80%. You're risking 60%. Here you're only risking, 60%. So there's a lot of risk to risk $1 on the SPY. So again, what I would do is I would only invest what you're willing to lose. If you're only willing to lose $100 on the SPY, I would only, invest $100 in the options, right? And if they expire worthless, they expire worthless. But you got to look at the big picture. And we do have some good rejection. We have some great resistance at 440, and we're starting to see it fail, right? I still do think, you could get away with risking $1 at most, and you could definitely make $2, $3 on the SPY today. By the end of the day, if we see that proper rejection and we continue to see the SPY fade and fall. So again, what do you guys think about the market? What are your guys' thoughts? Right? On a scale of 1 to 10, how would you rate the overall market today? Would you give it a 1? Would you give it a 9? What are you guys thinking? Or as Casey would say, let's do a poll. Let's do a poll, guys. You guys want to do a poll? I like polls. Polls are fun. Casey said, do a poll! So if you guys do want to do a poll, feel free. You see that little poll notice pop up? How's the market today? Is it shit? Is it good? Or is it great? I say it's a good market. There's some opportunity, but there's definitely some things to be mindful of. Let's be honest, right? Especially with these small caps, right? There's a lot of false moves with these small caps. There was some great volume out of the gate. We took advantage of some of those opportunities, right? But for the most part, right now, we're definitely starting to see some weakness in the market, right? We're starting to see some weakness. We're starting to see some volume leave the market. I mean, that's across the board, guys. Don't get me wrong, SOFI, nice move to the upside, right into the 200 SMA. If it breaks the 200 SMA at 1770, sure, we could see it at 18 bucks, right? We could. That's decent opportunity, or that's 40, 30 cents or so. Not shabby. HeroG failed big time. ANY, we already know what's up there. PTGX, DATS cracking its uptrend. A little bit of a false move there. So overall, there's opportunity, but it's just got to be mindful of the market conditions, right? It's a little bit on the choppier side. It really is. Slightly on the choppier side. But if we play it right, you can still make some great cash. And for now, I'm kind of sitting on the sidelines, right? That's what I'm doing right now. I'm just sitting on the sidelines, waiting for an opportunity to come to me. Not look for the opportunity, not hunt for the opportunity, but wait for the opportunity to come to me and say, hey, I'm a good setup. trade me right now. I don't see anything worth really getting involved with. Well, someone voted shit. I like it. Someone voted shit. I'm going to say that was Chris. Chris, was that you? Did you vote shit? Excuse the language, guys. I do apologize. I try and keep it professional, especially if you have kiddos at home and you got the live stream on, so I'll zip it. It's crap. That's what I should have said. Crap. So right now, I'm just, Chris says, haha, maybe. Maybe it was me, maybe it wasn't. Mwah, So again, right now, team, I'm sitting back waiting for the opportunity to come to me. All right, that's all I'm doing. I'm sitting back waiting for the opportunity to come to me. And it's pretty much a break-even day. PTGX got me for a little bit of a loss. PROG locked in a whopping 27 bucks. It was a false breakout. I had to get out. Great timing. FLXN, it was a good trade. It was a great short on FLXN, right? That one candle got me. That one candle concerned me. I got out. It set back up. I got in for the initial dump, right? If I didn't get out of the first trade, yeah, it would have been great. But I was able to get back in and break even on that one, losing 11 bucks. So I'm down a whopping $80 on the day. 80 bucks. I'm not going to go eat lunch. That's basically what it is. But now it's about sitting back and saying, okay, I'm okay with losing 80 bucks on a slow, choppy day. I'm not okay with losing 500 bucks. I can prevent that. How do I prevent losing $500, right? I don't trade bad setups. I don't overtrade. I sit back and wait for the opportunity to come to me. And if the opportunity doesn't come to me, guess what? I'm okay with walking away with an $80 loss, right? That's an easy recovery. Easy recovery. It could be setting up for a reversal, right? A little bit of a shakeout, right? A little bit of a shakeout. Quick resumption. It regained that support level of 38.62 pretty fast, right up into the VWAP. This is what I would wait for, Jason. This is what I would wait for, right? You're still in this downtrend. You're still in this downtrend. Wait for a higher low. Wait for a higher high. You could buy the higher low if you want to buy a higher low, right? If you want to buy off the higher low and anticipate. I'm not a big fan of anticipation, but you get the lower entries with tight stops for that possible reversal. Or you could simply just wait for the stock to reverse, right? Which is putting in a higher high. Then look for that proper reversal, slow and steady back up to 42. So there's a couple ways to trade it. The risky trade, the anticipation trade that comes with a very nice tight stop, right? Or the less riskier way, it has a little bit more of a stop, but at least you're waiting for that reversal confirmation to go long to see if it will push back up to retest the highs of 42 bucks. So absolutely, you just still have to wait, right? CCXI over 39.86 confirms the reversal, right? Over that prior high, 39.83, I'm sorry, confirms the reversal. And your targets are going to be these prior pivots, these prior little reversal points right here. There's a pivot point, $40.79. That's your one target. And then your next target's 42. So you have targets. You know, if you get the reversal, stop goes underneath the prior low. So stop would be at like 39.20. And then you know your targets. Build your plan. If you like it, jump in, take advantage of the trade. So right now, it's CCXI is like the number one watch. Number two, a little bit of a back burner play would be like DATS, right? Maybe like DATS. And honestly, my focus is here on the SPY for this moment and this point in time. I'm focused on the SPY. And if we start to see the SPY sell off, I'm definitely considering going short on Boeing, guys. I've been wanting Boeing short for a while, and I think that we're seeing some great, rejection at that 200 SMA. If we start to see the SPY curl on over, that's going to help Boeing starting to drop a little bit. So I'm definitely watching Boeing for a possible short coming on up. Especially if we start to see the SPY turn on over here a little bit at this level of resistance. So again, right now you have the reversal over that prior high. Right now you do not want to see it drop back below that prior high. And, you know, perfect placement for a stop right now has to be underneath that low. Right? This red line would have to be your stop loss on the chart. And this purple line is going to be your first target if you are long on CCXI, and your entry was probably this green line, right? Looking to get the reversal entry, your stop loss, and your target. I mean, right off the bat, we can see that it's not a bad little setup. You're looking for $1 reward. You're looking to risk 50 cents. It's a 2-to-1 setup on CCXI, and it has good potential. So if you took that trade off the break of the VWAP, breaking the prior high, basically signaling the reversal, you have a great 2-to-1 setup based on your stop loss where it must be, and based on your first target. Now, second target on this play, right, you're looking at $2. So now you're looking at a 4-to-1 setup if you get the second target, which is a retest of the highs. They're on CCXI. PROG can come off that watch list right now. PROG can come off the watch list. Let's go ahead and do this, team. Let's do this, right? We know what's going on. We know that right now we have potentially CCXI staying above 39.70 with a 39.25 stop loss, right? You're risking about 50 to 55 cents. Your first target's $40.79, and then your final target, one of your bigger targets, is a retest of the $42 intraday high. You have a 2-to-1 setup for your first target, and you have a 4-to-1 setup for your second final target, retesting the highs. Not a bad trade, not a bad setup. If you guys want CCXI, definitely not a bad little trade there. And I'm sure some of you guys were already taking that trade like Jason that was already looking at CCXI. DATS is still just fading and falling. We need to wait for the same thing. Wait for a reversal on DATS to get involved, right? PTGX, just fading and falling. Not really trying to hold on up here on PTGX. Then ANY just has a lot of resistance overhead, and that's why it's sitting sideways. The SPY, we already know there's a lot of resistance overhead, right? We see the daily, we see that extension level. There's a lot of resistance right here on the SPY. So with that being said, as long as we continue to reject here, right? As long as we continue to the reject here, right around that 440, we are looking bearish, right? There's a couple reasons, right? You have that gap down open, you have the downtrend, and you have that shooting star. I mean, there's just a lot of reasons why the SPY looks bearish if it cannot get above that 440 level and actually trade higher, right? So again, as long as we continue to get rejected here, I'm still short-term bearish here on the SPY, which is going to make me want to jump into some Boeing puts. All right, team. So let's do this. Let's take a quick 5. Right? Let's take a quick 5. Let's come back and let's get ready for our afternoon lesson. Right now, it's 10:58 in the market. Quick little 5-minute break. Get up, stretch, take a breath of fresh air. Get a breath of fresh air. That's what I meant to say. Grab a drink of water. You know, again, just disconnect for a moment. Right? If you're in a trade, don't walk away. Don't walk away unless you got a stop loss in. When we come back, we'll reassess if we have anything. And if not, we'll go ahead and dive into our afternoon lesson team. All right, so quick 5. We'll be back here right around 11:04, ladies and gentlemen. Get ready. We're going to have some fun, and we're going to rock and roll with this afternoon lesson. All right, I know I said 5 minutes, but hey, why? Why? Why 5 minutes? Let's just go ahead and get back to it right now. Hey, you just hit target. You just hit target on CCXI, guys. Nice reversal, confirmation, good stuff. And that's actually what today's lesson's on. Today's lesson is going to be on identifying a reversal and identifying a dip buy opportunity. Dip buys and reversals are much different. Look, you just hit target off the reversal. This is where you lock in at least half your position. You have to lock in something at this point in time. And then your stop loss ideally needs to be brought up to break even. So you just locked in profit at a 2-to-1. Now you bring your stop loss to break even and you still walk away very profitable. Or you say, you know what? I'm not too confident with the market that we're in. So what do? I lock it up completely. Right? Lock it up completely, 100%. I just made, you know what? $1 a share, right? $1 a share. Not bad. I'll take it. I had 1,000 shares. I made $1,000. Good job, right? Good job. But right now, you definitely have to at least take something, right? Ideally, half your position. And then you got to bring those stops up to break even, guys. So right now, let's do a quick little scan and see if there's anything worth noting before we dive into our afternoon lesson, ladies and gentlemen. Anything with FLXN right now? Very just slow, light day. USWS. USWS, nice. slow, steady momentum, right? Very slow and steady. Just went from around 3 up towards around 313, about a 5-cent jump there over the last 5 minutes. If you guys are watching USWS, you do have some room up to 330, and then you're looking up towards around like 338 to 340 there on USWS. And right now, it's safe to say that you have some support right around like 305 to 306, and that's going to be light support, guys. Light support. Better support on this stock is back down at $2.90 there on USWS. How's NAOV? NAOV, not a lot of hype behind it. PROG, we already were looking at that. What's it doing right now? Not a whole lot. EZFL, fading and falling now. EVLO right now, not doing anything. CENX is up 13%. Slow grind here on light volume. The only reason I don't like it is very, very light volume for a stock that's breaking over 15 and those prior highs right here. So again, it's not a crazy strong volume day on CENX, but it's very just light volume, very low liquidity, very light volume, very low move, and just a very slight move to the upside there on CENX. And you have the breakout scanner being hit with WVVI. The last one we'll look at, WVVI. Again, no volume here on this one. So right now, we look across the board at stocks that are gapping up, right? The top ones are the CCXI trade, right? CCXI off the reversal. Good job, Jason. Cleared about 50 cents to the upside. Good job and good work locking in those profits. DATS right now, still in a nice little downtrend. Nothing happening there. PTGX is just bouncing little by little by little, but overall, you can see that the sellers are in control here, not the buyers. So right now on PTGX, if it ever drops below that 33 level, that 200 SMA, we could definitely see PTGX back down towards around low a day. And low a day is down towards around 32.11. Below that 32.11 low a day, this stock has a lot of room to fall down towards around $30 next. They're on PTGX. So right now, team, I think it's safe to say that we can go ahead and dive into a little bit of an afternoon lesson. I'm going to start with a topic, not really a lesson, right? But I'm going to start with more of just kind of getting you warmed up, right? Getting that brain thinking a little bit, right? In the form of probabilities, okay? Again, I want you guys to condition your mind based on what we're getting ready to talk about and utilize this and think about this today, this week, next week, this year, and next year. I want you guys to start molding and really just rewiring your brain on how you think about the stock market, how you think about your trades, okay? And this comes right from Mark Douglas. I know a lot of you guys have watched Mark Douglas or read the book Trading in the Zone or watched the 4-part series on YouTube. If not, this is definitely something that you need to start thinking about, okay? And again, I'm winning this one, right? I have nothing prepared on this little discussion that we're gonna have. So again, I'm just whimming the crap out of it, but I think this will be fun, and I think this is going to be beneficial for everybody here inside of chat. Again, rewiring that brain, and again, getting into a different mindset about how you think about trading stocks, okay? So, I'm going to start with this. We know that we can have what? What kind of win rate is average, would you guys say? What is an average win rate? I would say an average win rate is 50%, right? That means for every 10 trades that you take, you're going to be right on 5 of those trades, right? If you have a 50% win rate, okay, for every 10 trades you take, you're going to be right on 5, okay? If you have a 70% win rate, which is the goal to get you guys there, that means for every 10 trades you take, right, you're going to be right on 7 of those 10 trades. Okay? You guys following along? So if you have an average win rate of 50%, which the average trader does, they're going to be right on 5 of the 10. If you have a 70% win rate, that means for every 10 trades, you'll be right on about 7 of those. The goal is to get you to a 70% or above win rate, right? That's what I want you guys to be at. It's about a 70% win rate or higher. Casey's at like 80 to 85. That's absolutely amazing. Here's the thing though. Some of the best traders in the world, they have this win rate. Some of the best traders in the world have a 50% win rate. So how do they still make consistent profit in the market? Right? This is a question. How do some of the best traders in the world that have a 50% win rate still make consistent profits in the market? Who's got the answer? Who knows? Right? We talk about this all the time, all day, every day. Right? How do you still make money in the market with a 50% win rate? That means you're going to lose half your trades. Right? You're gonna win half and you're gonna lose half. How are you making money, guys? Not mindset. It has a lot to do with risk management. I mean, it has everything to do with risk management, right? But the answer I'm looking for is the type of setup. Right? Obviously, yep, bigger profits than losses. Stop losses, 100%. Maximize your profits, minimize your loss. So to keep it simple, guys, a 2 to 1 setup. Minimum. That means if they're looking to risk $100 on a trade, right? If this is going to be their risk, is $100 on a trade, they're going to put themselves in a position to be able to make $200, right? So again, that's what a 2 to 1 setup is. A 2 to 1 setup is your profit is 2 times greater than your loss. So when you're looking at a trade, you do the 3 A's and you build your plan and you make your entry, right? And you're doing what you're supposed to do as a professional trader. You're building your plan, you're getting prepared. You know approximately what the outcome is going to be, right? Let's say you're putting yourself in a position to lose $100 on that trade. You have to ask yourself, based on this chart, based on this setup, based on my reasoning for getting into the trade, can I make at least $200? The answer has to be yes, right? And if the answer is no, then you probably shouldn't take the trade if you have a 50% win rate. If you have a 50% win rate, you need to only be trading 2 to 1 setups. That means you need to be looking to make double your risk. So in this example, you're risking $100 to make $200, right? So over the course of 10 trades at a 50% win rate, your average is going to be $100 per trade, right? You're going to average $100 of profit per trade. That's how you stay profitable with a 50% win rate. But here's the thing, guys. I know a lot of traders, they don't really think in probabilities. They don't think in, can I make double my loss? They don't really have that mindset. You got to mold the mindset. As a newer trader, you'll come to find out you have a 50% win rate. And again, some of the best traders in the world have 50% win rates, but they're looking at 2 to 1 setups, 3 to 1 setups, 4 to 1 setups. They're looking at making a greater amount of profit compared to their risk. And if their risk, right, is the same as their profit potential, they don't take the trade because they would break even. Let's assume you had a 1 to 1 risk reward, right? You had a 1 to 1 risk reward with a 50% win rate. That means you're literally going to be looking to make $100 on your winning trades, and you're probably going to lose $100 on your losers. You're going to break even at the end of the day. You're not making any money, right? You're making no money, zero, right? So you always have to first identify what's your win rate, right? You have to understand what that is. And how do you know what your win rate is? It's by logging your trades. You have to log your trades. You have to review your trades. And you have to look at the end of the day and say, okay, right? Based on the last 100 trades, I was right on 50% of them. And I lost on 50% of them. So if you know your win rate is 50% and you're losing money, there's a reason why you're losing money. And the reason why you're losing money is because you're not implementing a minimum of a 2 to 1 risk reward approach. So if you are at a 50% win rate and you're not making money, maybe you're losing money, right? You need to change how you take your trades. You need to be looking only for the setups that can give you double the reward compared to your risk. You're going to risk $100. The setup has to be able to make you $200 or more. The higher, the better, right? The higher the win rate, the risk to reward, the better, okay? So here's something else I want to kind of tap into. Let's say you have the 50% win rate, right? Right here. You have a 50% win rate. You're green on 5 and you're red on 5 over 10 trades, okay? That's 50%. You want to get to 70%, right? When you get to 70%, you start to identify your edge. We want to get you to that 50%, or I'm sorry, that 70% win rate. And here's a little bit of an analogy, a little bit of a breakdown. Hopefully it makes sense to you guys. It made sense to me. It's something I've been thinking a lot about, and it's something that I want to talk to you guys about as well. So let's use this example. Let's say you have a quarter, right? Let's say you have a quarter, okay? We're going to just draw a little face on there. This is 25 cents, right? That is a terrible quarter. You got George Bush. He's got his hair. Oh, looking beautiful, George. Oh, yeah. All right, so you got a quarter, right? If you flip the quarter 10 times, how many times is it going to land on heads? How many times is it going to land on tails? You have a quarter and you flip it 10 times. What do you think the probabilities there are, right? How many times do you think it'll land on heads and how many times do you think it'll land on tails? What are the probabilities? What would you say that percentage is? 50%, right? 50%. You flip it 10 times, you'll probably get 5 heads. You'll probably get 5 tails. It's 50-50, right? You don't know. It's 50-50, right? But let me ask you this. If you take a little, a weight, right? Say like a 5 kilogram little teeny weight, and you stick it on the head side, right? This is a weight. So you're weighing down the head side just a little bit more, right? You're weighing it down with a little weight. That blue dot's a weight. You're adding a weight to the quarter. Now you flip it 10 more times, right? The weight's on the head side. How many times do you think it's going to land on heads compared to tails, right? You have a weight on the head side, and you flip it 10 more times. Now, what do you think? Do you still think it's 50-50? Do you still think it's 50-50, guys? It's less. It is, right? The weight is going to make the quarter most likely every now and then fall, right? So it lands on the head side, right? Because the head side is now heavier than the tail side, right? So if you flip that quarter 10 more times, you have higher probabilities. You have higher probabilities of that quarter landing on tails, right? Landing on tails. Maybe 6 times it's on tails, the 4 times it's on heads, because you have that weight, right? Which is causing the quarter to fall on its face more often, which is showing tails, right? So you have a less chance, right? When you just have a normal quarter, you flip it 10 times, it's 50-50. You put a weight on the corner, you flip it 10 more times, it's probably going to show tails more than it shows heads, right? This blue dot, this magnet, what is that, guys? That's your edge. That magnet, that weight that you put on that quarter, that's your edge, right? How's it your edge? You know it's on the quarter. You know that over 10 flips, 100 flips, you know that you're going to see tails more than you see heads because you put a weight there. You put your edge there. You have an edge, right? You put the weight on the quarter. You know that it's going to show tails more than heads statistically from a probability standpoint because it's heavier on that side. You guys following along? Does this all make sense? That weight that you put on that quarter, that's your edge, right? So here's something I want to ask you guys. If you know that with that weight on the quarter, let's say that by adding the weight to the quarter, that's your edge. That weight is now giving you a 70-30 probability, right? This weight right here, your edge, is giving you a 70% chance that's going to land on tails and a 30% chance that's going to land on heads. Are we following along? Does this make sense? So if you have an edge, right, that weight, and now you're going from 50-50 to 70-30, and you were betting on that coin flip, how would you bet? How would you bet? Would you bet on heads or would you bet on tails? You bet on tails. Absolutely, right? Because you know that 70% of the time it's going to land on tails. 30% of the time it's going to land on heads. Now, based on that example, guys, right? Now we're going to take it into your trading. Based on this example, right? You know that for every 10 times you flip the quarter, you have a 70% chance that it's going to land on tails. You're not going to bet against yourself, right? Your edge. You're not going to bet against yourself, right? You're going to bet tails because you know that 70% of the time it's going to land on tails and you're going to win if you're betting on tails, right? So again, with stocks, if you know you have an edge, you know that you have an edge, and you know that your edge gets you 70% consistency. 70% of the time, you're right. It's going to land on your side of the quarter. Are you really going to put that much focus into each individual flip? Or are you going to put your focus into the 10 flips? Right? If you're flipping that quarter and you're betting, are you really going to be putting that much focus into each flip? Or are you going to be more calm, cool, and collected and comfortable knowing that over the next 10 flips, I'm going to be right? Over the next 10 flips, I'm going to see tails at least 70%. Are you going to be that? Are you going to have that much anxiety? Are you going to be, that emotional and like, what's it going to land on this time? What's it going to land on? Or are you going to sit back and be like, I just know that over the next 10 flips, I'm going to see 70% of the time it's going to be tails, right? Seriously. So why would you put that much focus and that much energy and that much emotion and that much anxiety or whatever you want to call it into each individual flip, right? It doesn't make sense. It makes no sense. You wouldn't, because it'd fuck with your head, right? It'd mess with your head. Because you'd be like, oh, heads, oh, heads, oh, heads, oh, no, oh, no, oh, no, it's on heads and I got $100 on tails. You would be like, I have an edge. The probabilities are in my favor, right? I put a weight on the fucking quarter. They don't know about it. I put a weight on there. So I don't care if the first 3 flips were tails because I know that the odds are in my favor. Same thing with trading. When you have an edge and you have 70% probabilities of being right, when you have an 80% probability of being right, are you focused on the first trade? Are you focused on the second trade? Are you focused on the third trade? Are you focused on the fourth trade? Are you focused on the 5th trade? Or are you focused on what you're going to average over 10 trades? You're not going to really focus on each individual trade as a trade. What are you going to do? You're going to step up to the plate. You're going to flip the quarter 10 times, and you know that 70% of the time, you're going to be right. So same thing with trading, guys. You can't put that much emphasis and that much focus and that much emotion into each individual trade. You can't. You have to look at the bigger picture. The bigger picture, right? The 10 trades, the 20 trades, the 100 trades, right? Because we don't know what order heads is going to come. We don't know what order tails is going to come. We don't know the order in which the coin is going to land, heads or tails. We don't know that. But what we do know is that we have an edge. And that edge is that weight. And we know that weight is going to force the head side down. It's going to land on tails more than heads. We don't know in what order those heads and tails are going to come. But we know over those 10 or 100 flips, the odds will be in our favor and we will walk away a winner. Same thing with trading. We don't know what order the bad trades are coming, the red trades. We don't know what order the green trades are coming. We don't know the trade right here. I took a trade, boom, I'm long. I don't know if it's a winner or a loser. I don't know until I close out of that position. All I know, this is my entry, this is my stop loss, this is my target, and I'm long. That's all I know. I don't know if it's going to hit target and make me a winner. I don't know if it's going to hit my stop loss and make me a loser. I don't know this. So why get frustrated? Why get emotional? Why get upset? I don't know. But what do I do know? I know I'm in the trade. I know that I built a good plan. I know it's a 3-to-1 setup. And I know it's a trading strategy that I've seen 70% success with in the past, right? It's an edge, right? I have an edge. All I know is that I have an edge. I have a good plan, good risk reward. That's what I do know. But I don't know how that individual trade's going to work out, right? There are so many unforeseen variables in the stock market. You don't know if it's going to be green. You don't know if it's going to be red. All you know is that you have an edge that produces 70% winning trades, right? You have 70% probabilities by applying this edge that you'll be right 70% of the time. But you don't know in what order your wins are coming. You don't know in what order your stop losses are coming, your red trades. You don't know. But you know that at the end of the day, over the course of 10, 50 to 100 trades, you should be right around 70%. So based on that information, why would you focus solely on this trade and hope that you're right? And when you're wrong, it fucks with your mindset. Why would you want to do that? Why would you want to do that? Right? You're going to black yourself out. You're going to frustrate yourself. Because let's be honest, guys. If you took 3 trades back to back to back and it's red, 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 let's be honest. How do you feel? Are you just like, oh, alrighty then. Well, I know that. No, come on, let's be real. How do you feel if you take 3 trades that are red back to back to back? What's it doing to you? It's messing with your mind. It's psyching you out. You're starting to think differently. Maybe my strategy's bad. Maybe I gotta start going back to the drawing board, the whiteboard, right? Why would you let each individual trade dictate your mindset? You're gonna get upset. You're gonna start doubting yourself, right? But if you know for a fact you have an edge and you're right 70% of the time, right? And how do you know that your edge produces consistent results 70% of the time? It's called data. It's called data. It's called backdate, or what am I trying to say? It's logging your trades, right? Logging your trades, going through a simulator, trading that same edge 100 times and getting raw data, right? If you trade a bull flag 100 times, you're going to be able to look and see what your win rate is on a bull flag. If you trade the reversal 100 times, you're going to know how many times you were red and how many times you were green. So based on that data, you know where your edge is. If you're 50-50 on a bull flag, take it off the table, right? If you're 60-40 on the ascending triangle, try and perfect that a little bit more to make it 70-30. If you're 80-20 on the dip buy, that's your edge. That's what you trade, because you know that for every 10 trades, you're going to be right on 8 and you're going to lose on 2. And you're not really too concerned about that trade. You're not too concerned about that trade. You're not too concerned about this trade. You don't really care, right, about each individual trade. What you care about are the 10 trades. You care about the 10, the average, the total. That's how you figure out an edge. You write it down. You write down your trades in a book. You log them in an Excel spreadsheet. You categorize them. And when you have 100 trades of each setup, of each strategy, what do? You go back and you review the data. Because if you realize that double bottoms, you win 30% of the time, do you guys still want to trade double bottoms? No, because you're going to lose more than you win. But if you realize that you have a 70% probability, 70% odds, and a win rate of a bull flag, guess what? Maybe you should put more focus into only trading bull flags, because you know that you're going to be right 70% of the time. So the takeaway from this, guys, right? The really big key takeaway, and this is what a lot of traders do. They're in the mindset of each individual trade. This one's red. This one's red. This one's red. They start blacking out. They start second guessing themselves. They're frustrated. They think they have to go back to the drawing board. They start adjusting their size. They start trading different setups. They start the worst things you can do as a trader. You start doing that. If you think about each individual trade and you hope you're right on this one, you hope you're right on this one, you have to change your mindset. You have to shift your mindset from each individual trade, and I hope I'm right, to an average of trades, and you don't care what that individual trade does. You really don't care what it does, right? Who cares what it does on that individual trade? Because you know, on average, you're going to get your winners, you're going to have your losers, you're always trading 2-to-1 setups, so you know you're going to be profitable at the end of the day, as long as you stick to it and quit focusing on each individual trade, because it is blacking you out. You're getting frustrated. You're second guessing yourself. I've done this as a new trader, right? I've done this. What do I do now? I don't focus on each individual trade. I don't focus on each individual day. I rarely focus on each individual week. Why? Because I know on average, over the course of a month, over the course of a quarter, when I have a large amount of trades, thousands of trades, I know that 70% of the time they will be green. I know that 30% of the time they will be red. And even if with a 1-to-1 risk reward, I can still walk away profitable. A 2-to-1, very profitable. Why do I stress 2-to-1 setups, 2-to-1 setups, 2-to-1 setups? Because I realize the importance of a 2-to-1 setup. If you have a bad month, the market's not hot, the market's not healthy, and you have a 50% win rate, let's say you're down 25%, right? At least you're not breaking even, at least you're walking away somewhat profitable. But let's say you have a great month, 70, 80% win rate, right? 70 to 80% win rate. 2-to-1 setups, you're going to walk away extremely profitable. How do you think traders make $10,000, $20,000 a month? Because they don't focus on each individual trade. They focus on the total of trades. Just like flipping the coin, guys. Just like flipping the coin, right? If you know the odds are in your favor because you put a weight on the head side, you're not going to really focus on each individual flip. It's not going to freak you out. You're not going to have anxiety. You're not going to second guess the next flip because you know over the course of 100, 200, 300 flips, you know it's going to land on tails more than it lands on heads. You know that. So why care? Why even give a shit? I'm going to be honest. I'm just being blunt. Why even give two shits about the next flip? Because it could let you down. It could disappoint you, right? That flip could disappoint you and let you down. And guess what that's going to do? It's going to carry on to the next flip and the next flip and the next flip. And then when you have a good one, guess what it does? It's euphoric. It's on tails. Whoa! Now you're euphoric. That's shifting your mindset as well, right? Now you're excited, you're euphoric. You're like, oh, I'm on top of the world. Just for the next one to be not what you were expecting, to let you back down. It's going to fuck with your emotions, guys. It's really going to mess with your emotions. This is a method of suppressing your emotions. Emotions are so hard to deal with in the market. And the reason for that is you have expectations based on what happened previously. You have high expectations and you're let down. You have low expectations, right? You start changing shit up. You get a little bit of a winner. Now it's a roller coaster of these emotions, right? But if you can quit focusing on each individual trade and focus on the total of trades and really focus on making sure that you have an edge first, right? What's your edge, right? Where's your strength? And focusing on your strength, you're not going to be let down. You're not going to be super excited and fired up. You're going to be like, that was a winner. On to the next one. That was a loser. On to the next one. All right. 20 trades. Nice. I won 15. I lost 5. I feel good. Right? You're not focused on each individual trade. You're focused on the total of trades. And that's going to help you rewire your brain, put you in a professional mindset to suppress the emotions. We were talking about emotions last week. And I know a lot of new traders deal with the emotions, right? Trading is an emotional thing. Let's call it how it is. If someone says they've never been emotional while trading, they're full of crap. Everybody has been emotional. And don't get me wrong, we're human. We're probably still going to feed into our emotions at some point. But we realize when we do that, right? We can be mindful and we could suppress those emotions, right? It's those reality checks that I talk about when we make mistakes. It's not to put ourselves down and beat ourselves up. It's a learning lesson. It's a reality check to get our brain and get our mind focused once again, because sometimes we kind of drift off. We drift, but then we got to take it back and center our focus. Every now and then we drift, right? We make mistakes. It's a slap in the face. It's a reality check. Boom, we're focused again. So never beat yourself up. If you make a mistake, we're human. We're going to make mistakes. We're emotional beings, right? But what that allows us to do is take that as a reality check, as a lesson learned, to get refocused, to not focus about each individual trade, but to focus on the total trades, the average, especially when you have an edge that produces 60 to 70% win rate, right? And that's going to help you suppress your emotions. So this little conversation, this discussion was intended to bleed into what we talked about last week to help you guys think differently about your trades. You're not focused on each individual one. You're gonna psych yourself out. You're gonna bum yourself out, and it's going to bleed into the next one in a negative way. So if we can stop thinking about each individual trade, we're not excited, we're not bummed out. We just move on to the next one. We move on to the next one. We move on to the next one. And guess what? At the end of the month, you're going to be very happy by doing that because you're going to see nice profits, right? But start rewiring that brain. Start training your mind to think like a professional trader. And this is how a professional trader thinks. They think about the total, not each individual trade. And if you guys are like, Josh, I need an edge, that's what we do here in chat. All the education, all the lessons, all the strategies, all the patterns, building plans, all that knowledge is so you can take it and apply it to see what your edge is. Just because Casey's good at bull flags doesn't mean Angel is, and that's fine. Just because I'm good at dip buys doesn't mean Casey is. That's fine. That's my edge. That's Casey's edge. But we're here to teach you pretty much all you need to know about trading stocks, day trading stocks. And you can take this information that you have and you can apply it to figure out what your edge is. Right? I'm not here to teach you my edge. I'm here to teach you how to trade stocks. And you can determine what your edge is, and only you will know what your edge is. And how do you determine an edge? You have to paper trade. If you don't want to paper trade, what do you have to do? You have to trade with a small amount of money. We call that sample sizes, a share. A share. Why would you want to go 1 billion shares and lose your entire account when you're testing? We all have to test. Test with small size. Test with a paper account. Get some data. Get some data, guys, right? And then review that data. Review it all and see exactly where your strengths are and see exactly where your weaknesses are. Sorry, I got to fix my monitor. And based on that data, you're going to know where you should put your focus. Should you be focused on trading bull flags? Should you be focused on high-day breakouts? Should you be focused on the reversal? Based on that data, you're going to know where you perform great and where you perform bad. You're going to eliminate the bad. Maybe paper trade that more and try and fine-tune it. You're going to focus on the good, right? And you're going to see consistent results at the end of the day, at the end of the month, at the end of the year, and you're going to be a successful trader. So start rewiring your brain. Start thinking in probabilities and start thinking over the course of 100 trades. Not each individual trade, over 100 trades. That's going to not get you super stoked and super fired up and cocky and arrogant. You're not going to be down on yourself and depressed and blacked out, right? It's going to help you suppress those emotions. It's going to help you trade better in the stock market, guys, okay? So I did record this. This is something I will edit and upload to the video lessons library because this is something that you guys need to do, right? And we have to work on this day after day after day after day after day, okay? So let's go ahead and talk about, let me actually stop this recording and we'll start a new one for the actual lesson. This was just a topic. I whimmed it. I repeated myself a lot, but conversations like this, guys, not a lot of people, they have these conversations, right? I mean, I've never once talked to a trader that's talked to me about this. Never. I've never had any mentor of mine talk to me about stuff like this. Why? Because they don't know. Why? Because they don't know how to explain it. I don't know how to explain it. I was pretty rough in my opinion, but I got the point across. It makes sense, right? When you guys agree, it makes sense. I got the point across. It wasn't the best lesson, but it was something that needed to be talked about. It is important. It's very important. And I promise you guys, if you start thinking like that, changing the way you think, thinking in probabilities, not thinking of each individual trade, but think over 100 trades, knowing that you have a 70% win rate based on the data, guess what? You're not going to be let down when you have a loser. You're not going to be fired up and cocky and arrogant when you have a winner. You're just not. It's going to take time, but you're going to slowly start suppressing your emotions, and you're going to get into the zone, and you're going to start performing, you're going to start trading, you're going to start acting, you're going to start thinking like a 6-7 figure professional trader. And guess what? You're going to be a professional 6-figure a year or 7-figure a year trader if you can start thinking that way. All right, let's go ahead and start round number 2. And today, ladies and gentlemen, we're going to be talking about a dip buy, right? You've heard me use the term dip buy, and I've had some questions like, Josh, what's a dip? What's a dip buy, right? And then a reversal, right? Like today over on CCXI, we nailed the reversal. So I want to start with just differentiating the two, right? A reversal is a little bit slower and steadier, okay? Just to classify these, reversals are typically slower and steadier, right? Takes time to form, 5 minutes, 10 minutes, it varies. Dip buys are quick and aggressive, fast and volatile, 5 to 10 seconds. There's a big difference between a dip buy and a reversal. Again, dip buys, fast and aggressive, right? Volatility, quick. Reversals, slower and steadier, easier to manage, right? Let's go ahead and talk about reversals, guys. And I'm going to give you guys a real example of a reversal here on CCXI, which we nailed, right? A reversal is when the stock is reversing from a particular trend, right? So we know a stock is in an uptrend, which consists of higher highs and higher lows, higher highs and higher lows, higher highs and higher lows, right? We know that an uptrend consists of those higher highs and higher lows. And when the stock reverses, it's basically shifting from uptrend to downtrend. It's reversing from its uptrend into a downtrend. And when do we know that it's reversing? When it stops putting in higher highs and higher lows. When it starts putting in lower highs and lower lows. That's reversing. Same thing to the downside. The stock is in a downtrend. Lower low, lower high. Lower low, lower high. Lower low, lower high. When is it reversing? When it stops putting in lower lows and lower highs. When it starts putting in higher lows and higher highs. It has now gone from a downtrend to an uptrend. It's reversing, right? So the reversal strategy, right? It's a very easy strategy. It's one of the easiest and the least amount of risk with great upside potential, right? Great upside potential. 2 to 1, 3 to 1, 4 to 1, 5 to 1, right? Low risk, easy to manage, slow and steady, predictable, right? It's very simple. So let's say you have a downtrend in a stock. Lower low, lower high. Lower low, lower high. Lower low, lower high, right? And you're looking for a reversal. What are you looking for? You're looking for the stock to stop putting in lower lows and lower highs. You're looking for the stock to start to put in higher lows and higher highs. So let's say you start to see that, right? Starts to put in this higher low, right? That low is higher than the previous, right? So you're saying, they start to reverse here, right? You have the lower high, lower low, lower high, lower low, lower high. Starting to see a little bit of a higher low form. Okay, maybe we're starting to see this stock reverse from its downtrend into an uptrend. But what do you need to wait for? Right? Like what we waited for on CCXI. What do we need to wait for? The stock to put in that higher low and to also put in that higher high. Once the stock puts in a higher high off of a higher low, that signals the reversal. The reversal has been validated. Is it 100% that the stock's going to move to the upside? No. Right? There is always that percentage chance that the stock fails and it moves lower. But again, it's a slow, steady, easy, predictable trade. You look for the stock to put in a higher low, HL, higher low, right there, the green line. And you wait for the stock to put in a higher high, higher high. And when the stock puts in that higher high, you make your entry. Where does your stop loss go? Below the higher high level, right? So if the stock breaks out, reverses, comes back down and falls back below, cut it, because it'll probably continue to fade lower, and you don't want to be a bag holder. You don't want to turn a day trade into a swing trade. You don't want to turn a day trade into an investment, right? But when the stock reverses off the higher high, sometimes it'll come back down, retest, and move higher. What did we see on CCXI? What did we see? Right? Let's go ahead and clear this out. Clear the drawing set. Boom. Let's go ahead and pull up our paint tool again. Boom. So we have the stock that's in an uptrend, right? We have higher high, higher low. We have higher highs, higher lows. Now we got a higher high with a lower low. Now it's reversing. Now it's in a downtrend. Lower high, lower low. Lower high, lower low. Right here, this was a false reversal, right? This was a false reversal. Look at this. Put in a brief higher low, put in a higher high, and it failed, right? It failed. Why would I not have taken that trade, right? Someone tell me, based on you being in chat for a while and hearing what we talk about in the live stream, we have the stock that's in a downtrend, right? It's in a downtrend, and you start to see that mild reversal, right? You have the higher low, and right here, you got the higher high. Why would I have not taken that trade? Why shouldn't you have taken that trade? Why would you have maybe thought second about taking that trade off that validated reversal? It validated the reversal, right? It put in a higher high. Why would you maybe take a step back from that trade? Casey says volume. Okay, Casey says volume. I like that. There's one thing right in front of me that I see. One thing that I see right in front of me, right? The first time that we came up to this point from the underneath side. Volume, that's criteria. Volume is correct. But there's something else I'm looking for, right? What do we know about technicals? What do we know about the VWAP? Come on, guys. What do we know about VWAP? Typically, when a stock falls through the VWAP and it comes back to VWAP on the first time, typically it fails, right? We know that about VWAP, right? Just like when the stock breaks above the VWAP and it pulls back for the first time, right? Typically, it shoots off that level. The VWAP, right? So we know that typically the stock does not break back above VWAP on its first attempt. Typically, we see it on attempt number 2 or number 3. So even though I'm seeing a slight reversal here, why am I not taking the trade? Because I'd be buying it right at VWAP resistance. Fuck that. I'm okay. I'm good. Because I know that 80% of the time, the stock's going to fail off VWAP the first time. Not always. If it broke out, maybe I find a different setup. Maybe it sets up differently. That's fine. But I know 80% of the time from experience, when a stock falls below VWAP, it usually is resistance, and then it breaks out, right? So I wouldn't be taking that trade because I know that there's a higher chance that the stock is going to reject and fall. So I'm waiting, right? I didn't even call this out. We weren't even talking about it. And then it pulls back, right? Puts in this higher low. Puts in this higher low, right? Broke the VWAP and put in the higher high. So now you have 2 reasons. You have a reversal being validated above VWAP, above resistance. Can you guys see that? Let me pull it up a little bit bigger. You have the slight higher low. You see another higher low validated off the 9 EMA, which is cool, but I'm not even looking at that. But you have the higher high reversal, right? Here's the high. Here's your higher high above VWAP with volume, right? Here, you didn't really have volume. Look at the difference in volume. Huge difference in volume. So not only do you have the stock closing back above the VWAP, which is bullish, you have the stock reversing, which is higher lows with a higher high. It's number 2. And you have volume confirmation. Boom. Why'd you take the trade? It was a reversal. Stops underneath that prior low. Stops are under VWAP. Took the trade. So hit target. Right? That's a reversal, guys. Okay? That is a reversal. Is when the stock is in a trend. Whether that's an uptrend, right? Or whether that's a downtrend. You need to wait for the stock to put in a higher low followed by a higher high. When you see that, you can make an entry. Okay? you can make an entry for a reversal. Where do stops go? Underneath the prior low. Where are your targets? Every previous pivot high. Same thing when a stock is in a uptrend going into a downtrend, right? It stops putting in higher highs, higher lows, puts in a lower high, followed by, right, the lower low. That's your entry right there, right? When it confirms the reversal. Where's your stop loss? Over the prior high. Where are your targets? Every prior low. That's how you trade a reversal. It's one of the easiest trading strategies. It's a game of patience. It's a game of validation, volume, waiting. But once you wait and you get the confirmation, your stop losses are very tight. It's just literally if the stock moves back above the prior high, you're stopped out. If the stock drops back below that prior low, you get stopped out. But what are your targets? It could potentially be the high a day that we just came from. It could be that high, that high, that high. And you have a 1-to-1, 2-to-1, 3-to-1, 5-to-1, 6-to-1. I mean, gosh, guys. I mean, absolutely great risk reward. Low risk, high reward. Slow and steady, right? It's not volatile. It's not quick. It's not aggressive most of the time, right? Usually it's slow and steady, right? It's easier to trade. It's easier to manage. It's a simple strategy, a simple approach for newer traders, right? And exactly what we saw here on CCXI, right? The stock pulled back, broke over that prior high in VWAP, right? Jason got the entry. I was busy commentating it. Boom. There was Jason's entry, right? Stops under the prior low. Boom, right there. That red line's the stop. Target, prior high, right around there, right? That purple line. Target, prior pivot point, right? There was a higher, or the lower high pivot, right? So we got our entry, we had our stop, we had our target. So at that point in time, we knew, boom, we can make $1.07 a share. We could lose 52 cents a share. We know it's a 2-to-1 setup. And that's just your first target. Where's your second target? The retest of the high a day, right? That prior pivot point. So we know that if we hit final targets, that's potentially $2 of reward with 50 cents of risk. Now we're looking at a potential 4-to-1 setup, right? We never made it quite up there yet. We have yet to make it right to the high. But look at how much it's moved since it's reversed and it's never came back down to your entry and stopped you out. Not saying it's going to be like this every time, 100% of the time, but it's an easy, slow, steady, manageable trade. If you like easy, slow, and steady, manageable trades. What do I like? I like volatility. I love volatility. I thrive on volatility. The faster, the better. The quicker, the better. I'm really good at nailing entries off support and resistance. When the market's slow and steady, sometimes it falls on over and it cracks, right? We don't see those aggressive bounces, those aggressive moves. I like low float stocks, volatile stocks, quick stocks, aggressive stocks, right? I can pinpoint my entries almost to the penny. It just comes from experience, right? I like to get in, get out. Get in, get out. Why is that? The way I think is, as a professional trader, we are good at managing risk. And when you're ever in an open position, you're exposed to risk. So I want to reduce the amount of time that I'm in the market. Reduce that risk exposure, right? Because there's those unforeseen variables. SCSN, $6, halted, gaps down at 70, right? If I was in that slow and steady trade, I could have been stuck in SCSN on 1,000 shares. It could have dumped all the way down to 70 cents and I could have taken a $5,000 loss. I could have lost 90% of my investment because of those unforeseen variables. So that's why I like volatility. That's why I like quick trades, in and out, 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 right? That's me. That's my edge. And the reason for that is the more time I'm in the market, the more I'm exposed to risk. And as a professional trader, I have to be great at managing risk, which means that I should spend the least amount of time in the market as possible. That's what makes sense to me, to avoid some of those unforeseen variables, okay? So what is a dip buy? You know what a reversal is, but what's a dip buy? A dip buy is literally you're buying the dip, right? And there's some criteria behind it, all right? So let's go ahead and start with an example that the stock is just tearing to the upside. This stock is just absolutely bananas, right? This stock is just freaking ripping. Actually, we're going to do like this. Stock is ripping. Get a nice little hiccup level right there. Not too shabby, right? It's got a nice little upper shadow. Got a nice little lower shadow right there, right? The stock is just absolutely tearing to the upside, right? And then you start to see the stock. No! You got to go this way. There we go. There we go, little buddy. There we go, little buddy. Right there. Right? So the stock is just ripping and ripping and ripping and running. This stock just went from $4 to $6. Holy moly. Within 1, 2, 3, 4 minutes, it went from $4 to $6. That's huge. How many times have you seen a stock within 4 to 5 minutes rip $2? Raise the hands. Have you ever seen it? If you've ever seen a stock go from $4 to $6 in 5 minutes, raise your hand. If you've never seen a stock go from $4 to $6, give me a thumbs down, right? I'm pretty safe to say 100% of us have seen a stock go from $4 to $6 in like 5 minutes, right? Just straight up, aggressive, fast, volatile. Whoop! Huge move, right? I have a lot of times, right? So when we see a stock go up that fast, think psychology. What do you think's going to happen? When a stock goes from $4 to $6 that quick, what do you think's going to happen? Put yourself in those shoes. Let's say you're in a stock at $4 and within 5 minutes it goes to $6. What's going to happen? People are going to take profit, right? It's natural. Someone's up $2 a share. They had 1,000 shares, up $2,000. What are they going to do? They're going to dump their 1,000 shares. They're going to take their money and they're going to run. There's going to be sellers. So when a stock rips up very aggressively and very fast like this and starts pulling back, we don't want to see it slow and steady, right? That would be a good reversal, right? That would be a potentially good reversal, right? Slow and steady. That's a reversal. That's okay. We know what reversals are, right? We know how to trade those now. I want to see volatility for a dip buy. So what am I good at? I'm good at identifying support and resistance. So what do? I know that buyers like to buy off the hiccup, right? This red candle right there. You see that beautiful red candle? It's a stall, right? The stock ripped. Whoop! It stalled. Traders took a breather. Whew. All right, that was fast. Where are we going next? Boom! Right? And it rips up again. That red candle is what we call a hiccup, right? It was a stall in price, right? Buyers and sellers are like, what are we going to do next? What are we going to do? All right, buyers won. They pushed it to the upside. When the stock comes back down aggressively to that hiccup level, it will bounce 80% of the time aggressively. But it has to come down to that level aggressively. If the stock is coming down to this level, slow and steady, it might just be a little bit of a bounce and then it just may start fading, right? We want to see the stock come down aggressively. You see a nasty red candle. Boom. You see another nasty red candle. Boom. How many times have you seen that? Raise a hand. How many times have you seen a stock go from $4 to $6 in 5 minutes, and within 1 or 2 minute candles, the stock has given almost 50% of that run back? I mean, just like that, you're like, wow. 4 to 6, 6 to 450, pump and dump, right? What a pump and dump. Man, that was nasty. Look at that rug pull. Ooh, how many times have you seen that happen? I've seen it a billion times with penny stocks. A million times. I've seen a stock rip up and then just fall and fucking dump. I like that because I've found a strategy. I've found an approach, and that approach is marking up the hiccup area, right? It can bounce off the high. It can bounce off the low. So what do? I find the mean, the average, the middle, right there. Right there in the middle. So what will Josh do, right? Josh will wait for the stock to dump, right? Just dump, right into that hiccup level, I will jump in with very aggressive size for the quick bounce. I will take profit right away. That's it. That's a dip buy. Right? Stock pushes up aggressively, fast and volatile. I'm waiting for the stock to sell off just as fast, just as volatile. The quicker, the better. The faster, the better. The more volatility, the better. Because the faster it is down to that hiccup level, the quicker the bounce, the faster the bounce, the bigger the bounce, right? I'm not looking for the stock to bounce and go to the moon. I'm literally looking for 20, 30 cents. 20, 30 cents, 20, 30 cents. That's it. Looking to nail my entry, right? Get in, take it for a quick bounce. Now, I've been in a trade where it's bounced and it's squeezed into a halt to the upside. I made like 10 grand in a trade. I've made like 8 grand in a trade. Absolutely insane. But I'm not asking for that. I don't want that, right? What do I want? Volatility on down, make my entry, quick 20 to a quick 30 cents, right? I'm jumping in usually with a couple thousand shares, right? Couple thousand shares, quick 20 cents, $400 to $500, in and out, in and out, in and out. What's my stop if I don't see the stock slowing down, right? So if I'm in right there and I just don't see it bouncing and it's not slowing down, it's still dumping, I cut it right away. I don't care if it bounces 2 seconds later. I don't care if it bounces 5 seconds later. I don't care if it bounces right when I cut it. If it comes down to my level of support and I'm in and I do not see it slowing down and I don't see those buyers moving in and bouncing and I see it still working its way down, I will jump out as quick as possible, right? Why? Because I don't want to take the chance of it halting to the downside. I don't want to take the chance of that stock continue to crack, continue to fall, and then halting to the downside, right? This is a risky strategy. This is a very, very risky strategy, but it's also a very, very high rewarding strategy. And I've perfected this to where I'm right 70 to 80% of the time, right? My stops are very small, very tight, very quick. I'm reading the level 2. I'm reading the time in sales. I'm watching price action. If I don't see what I want to see right then and there, I'm out, right? Small loss. When it bounces, it bounces. And you guys remember was it last Friday with CEI? Or last Thursday with CEI? Someone was like, how's Josh nailing these bounce plays? When I was like, hey, I would take the dip at 190. And then it bounced up 50, 60, 70 cents in the matter of a minute. That was a dip buy. You guys remember that inside a chat? It's like, hey guys, it's volatile, it's fast, I love it. This is where I thrive. This is where I make the most amount of money in the market. Boom. It was like a 190 dip buy. I was like, 190 dip buy. I would jump in on this. I would jump in. I would risk maybe 5 cents. Came down to the penny, bounced 50 cents and halted to the upside. Gapped up, squeezed again. Right? That's what I love. We haven't seen the volatility like this in the market for my strategy that I really thrive off of work out. We haven't seen quick ups and downs for those dip buys. I want to see some consistent volatility in the market. You guys will see me trading this strategy. You guys will see me trading the dip buy. Last July, last year, one of my biggest months of trading, $25,000, only from this strategy. Only from the strategy. I only traded maybe 15 times that month or 10 days. Made 25 grand on that strategy. Because it was a volatile market. It was quick. It was fast. It was moving. And I absolutely do good. I love this strategy. So again, you have reversals, guys, right? You have reversals. And a reversal, slow and steady, right? Looking for the higher low, the higher high with volume. You look to make your entry. Stops go under that prior low, right? And you take it into your next levels, which are all those prior highs, right? All those prior highs. Now the dip buy is like CEI, that one very volatile day. Let's see if we can go back to that day and I'll show you exactly what I mean with the dip buy. Let's go back 10 days if we can. Let's scroll back to that extremely volatile day. Was it last Friday? No, it was the week before, I think, when it was halted all over the place on CEI. Wasn't that day. It was the other nasty halt day, where it went from $5 and dumped. Is it? You getting there? Right there. Yep. This was the volatile day. Yep. This was it. So I can't remember exactly to the penny, but okay, it was like 320, right? It was like 320. I saw all the support. I saw the resistance. I saw all this intraday mess right around 320, spiking high, breakout, pullback. I see that demand zone, right? I see that 320 demand zone. And if you guys could vouch for everybody else, if you guys were in chat that day, I was like, hey, you know, this stock started dumping, right? This stock started dumping really aggressively, right? It's dumping. I'm like, guys, I would take it for like a 320 dip buy. I would take it for like a 320 dip buy. I love it. If I had my bigger account right now, if it wasn't settling, I would jump in with a couple thousand shares. And then it halted to the upside. Remember that? 320 to like the penny. And it bounced like 60, 70, 80 cents, got halted to the upside, right? Again, that's what I love. Volatility. Big dump down, got halted. Consolidate, big dump, right? To the penny, to that 320 demand level. Came down, bounced, whoop, big time. That's my strategy. That's my edge. That's what works for me. So again, we have CEI, an example of a dip buy, right? Right down into support, right down into that demand area, quick bounce. I mean, you're talking 1 to 2 minutes tops, right? Most of the time, I'm in and out of these trades in like 10 to 20 seconds. Would I have taken all the way to 4? No. Would have nailed the dip, scale out, right? No way I would have held this all the way to 4. Dip buys, for me, 5, 10, 20 seconds. 5, 10 to 20 seconds at most, right? CCXI, which was our reversal, these are slower and steadier moves, right? Slow and steady, easy to manage, right? Less risky, better reward, right? Low risk, high reward, slow, steady, consistent, easy to manage. New traders, focus on reversals. Focus on reversals, guys. Right? Stay away from the volatility. Stay away from the craziness until you get better, okay? CEI, dip buy opportunity. High risk, very volatile, right? High reward if executed properly. So I wanted to go ahead and clarify that today, guys. As I've been talking a lot the last week or so about dip buys and reversals. You've heard that term come out of my mouth quite a bit. I've actually received some people reaching out saying, Josh, what's a dip buy, right? What's a reversal? What's the difference, right? I don't understand. Now here's some clarification, right, on what a reversal is. When I say, hey guys, a reversal inbound, you already know what a reversal means and how to trade them. If I say, hey, I'm looking for a dip buy opportunity, you know, like, that's volatile stuff, man. I'm gonna sit down on this one and just watch. All right. So, do we have any questions, comments, or concerns about dip buys? Do we have any questions, comments, concerns about reversals? Right now, it's our open floor Q&A session. Right now is the time to ask a question if you have it. All right, team. I hope you guys enjoyed the lesson. A little bit of a topic, some clarification, right? How to properly trade the reversal and how I trade the dip. And if you want to start getting your feet wet with a dip buy, just make sure you're really good at support and resistance. Make sure you have a good broker. Make sure you paper trade at first a little bit to make sure you like it. But again, it's a very fast, very crazy, but very profitable trading approach. I actually made a video last July on my reversal strategy and how I made $25,000 last July trading the strategy. You can actually go check out that video over on YouTube, right, if you want to check it out. And again, Beth and Chris, they've been in chat last year when I was trading that strategy. It's quick, it's fast, but it's very profitable, and I absolutely love it. All right, team. So if we don't have any questions, comments, or concerns, we are going to dive into lunch, right? Go grab a bite to eat, have some fun, disconnect. If you guys are still here, be smart, be safe, right? We're finally seeing the SPY reject the way we wanted to see the SPY reject. again, from a possible 440 entry, locking, you know, $1.50 to the downside. I'm glad I didn't take Boeing short because the market's pulling back. Boeing actually is finally on the bullish side of things. So honestly, my bias is now shifting. My bias was short for the longest time because that 200 SMA, this big falling channel. But now I'm actually switching my bias from, you know, short to long on Boeing. So again, we're all set ready to rock and roll. So right now over lunch, I would focus on the SPY, guys. We're seeing the SPY, you know, reject off that level. That could mean we could come down and fill this gap at 435. Actually, intraday, we did in pre-market, but not on the daily. You can actually see that gap fill. So we do have room down to around 437.83 and then 435 there on the SPY. All right, ANY right now. Nothing much. PTGX, nothing much. DATS, nothing much. CCXI looks to be the best at this point in time, guys. All right? If you guys do have any questions inside the chat, please let me know. I'm still here momentarily, but I'm going to go ahead and shut down the commentary. Go grab a drink of water, guys. Stand up, stretch, and we will come back this afternoon right around 2:30 as we finalize our Money Monday and see if there's any more opportunity in the market. All right, team? Have a good lunch. Way to go. Way to crush it. Make sure you guys are posting those profits inside of Profits Chat. And I'll see you guys back here right around 2:30 as we kick off our Power Hour commentary. I'll see you guys right around 2:30.